Good morning, good morning. Ron, you are a generous soul, aren't you? How's everyone doing today? Good to see you guys. Paul, Bobby, I totally heard Robin Williams. Dwight, good to see you. Alex, Dano, Rizwan, nice to have you with us. Welcome to Nexgen. David, good to see you back. Miss Debbie, GWC, great to have you guys. D-Rock in the house. You got to say it like that, right? Sophia's here. Taking little nibbles. Guys, good morning, good morning. Greetings and salutations, all those great things that we say to start the day. I am excited. I don't know about you guys. I'm excited. Today's going to be the best day ever, just so you know. So if you weren't bracing for it already, go ahead and brace for it. Best day ever. Um, Good morning, Snorri. All my little studiers here. This is so good. Um, Guys, I'm Mark. For those of you that are new, Eisenhans, nice to see you back in the room. Walter S., great to see you. Man, I love it. Pretty excited today. I did trade yesterday, Snorri. I trade every day. Every day, every day. Had a good day. Had to be super patient yesterday, though. Snorri, I think I waited over an hour for my first trade to set up. I missed my daily goal by about 50 bucks. So not a bad day. Good morning, D-Rock. Um, It was a good afternoon. It was for your plan, right, Sophia? For my plan, it was a lot more patient. Um, and this is why I don't compare myself to Sophia. Sophia may make 10 grand on a day with her plan. I may not make that much because my plan has different rules, and that's okay, right? Snorri, I try to make 250 a contract. That's it. That's it. 250 a contract, guys. You'll never have to work another day in your life. Um, And D-Rock, it's like that sometimes, right? You're like, oh, my rules are almost met. Son of a gun. You made your quota for funding, Sydney, yesterday? Congratulations. I taught you everything you know. Sydney, that's amazing. So now here's the thing that I want to talk to you guys when you get funded. And I'm talking to myself too here, is when you get funded, don't change anything that got you there, right? Dance with the girl that brung you. Um, Just because you're funded, it's your plan that got you there. It's your rules that get you there, guys. So when you get funded, don't change anything, right? Don't get crazy. Don't feel like you have to be someone you're not or start taking more trades. Just do what you do, and you'll do great. One of the things I do every morning, guys, is I go to forexfactory.com and I check for news. I couldn't care less what the news is. I'm not going to lie. It doesn't bother me. It doesn't bug me. I don't read news in terms of, oh, I wonder what the final GDP QQ is going to be. Who cares? What I do know is that every time there is a high impact news or a medium impact news, it can change the direction of the market without notice. It can make it too fast to trade. And for me, everything that I do, and hopefully everything that you do, revolves around advantages, guys. And there are no advantages in trading a market that moves too fast to read your indicators. So when I check news, I'm just making sure I won't be here at 4 p.m., but if I were, hey, good morning, Tim. Good to see you in here. High impact news coming at 4. At 10 a.m., we've got some medium impact news. So right around that 10 o'clock hour, you have to make the decision. Do I want to trade when people may be reacting to what's said in the market? And that's only a decision that you can make for yourself. But if you go to forexfactory.com, you at least have a jump on the game. And then I'm going to go to the education page. Everything that I talk about comes from the education page. There are zero secrets with Nexgen, and I just knocked my monitor over almost. Um, I promise you, I will give you everything that you need to be successful. I will give you anything and everything. Every tool that you need to be successful with this software is at your disposal 100% here in the education class. The tutorial section. I sure will. Snorri, I'd love to. Remind me if for some reason I see something sparkly into the second, third hour, and I don't start talking about it, let me know. I love talking about the NASDAQ. I'm a big fan of trading the NASDAQ, but it doesn't trade the same way. Well, the large chart's the same, but we'll talk about the entries. Guys, every day I talk about the same stuff. Every day, collectively, we talk about trigger line and Fibonacci rules for when it's okay to trade. And we're doing this for a high probability trend trade, guys. A trade that really sets you up for success. A trade that teaches you to read your charts. Um, 90% of what you do during the day, and it's right here in the materials. The reminders are always there. 90% of what you do during the day is going to be reading your charts. It's going to be waiting for advantages. It's simply going to be sitting on your hands and doing nothing. This will be the most difficult thing that you do as a trader. Good morning, PFI. The hardest thing for any of us to do, because we're human, right? We want to move, we want to do stuff, is to do absolutely nothing. But the most advantageous thing that you can do as a day trader is absolutely nothing if your indicators aren't providing you a statistical advantage. So 90% of your day, guys, sit on your hands, do nothing. Get used to it. Go ahead and plan it out. Get a little handheld video game, right? Listen to music. Someone told me yesterday that they've got a playlist for trading because it keeps them calm. I think that's brilliant. My brother's told me he listens to reggae and it calms him down. But your chart reading, sitting around doing nothing, that's 90% of it. But this high probability trend trade that we're going to talk about, guys, is going to make you a chart reader. It's going to make it so you know when to react and when to enter that market. And your chart reading is going to put you in a position where you can open up your workspace. You can look at your indicators. And when you do, you're going to understand three very key concepts. You're going to understand where the market is likely to go. And this becomes entries for that high probability trend trade. You're going to understand where the market is likely I'm sorry, where the market is likely to continue. I'm getting ahead of myself. I'm excited to be here today. Can you tell? I'm a little wound up. You're going to understand where the market is likely to continue. Guys, this is our entries. This is where we get in. This is the best of the best. This is where the least amount of risk happens. This is where the highest chance of success happens. You're going to understand where the market is likely to go, and this is going to create a management plan for you eventually as you grow with the software and learn to read it. And then the most important concept, guys, is you will understand where the market is likely to stop. These likely to stop places are what we call termination conditions. And a termination condition can stop the market in its tracks. It can reverse the market. It can create untradeable scenarios because these likely to stop areas typically happen at fibs, one-to-ones, divergence highs and lows, but these are where the people that move the market are reacting. These are where the people that are in control of the market are making decisions about staying in their positions, exiting their positions, or entering new positions. Next gen users, you will understand where these areas are. You'll be able to identify them in a moment's notice, and you're going to find that they keep you safe when you choose not to trade into them. So the goal is we're going to focus on a high probability trend trade. My first hour every day, especially if you're brand new, my first hour every day is spent talking about these rules and the advantages. And there's the high probability trend trade is a trade that typically wins 70 to 80% of the time. It's a trade that gives you the advantage of momentum, the advantage of a clear path, and the advantage of an entry area. And when you put these three advantages together through your chart reading, they create a trade. And we're gonna focus on that one. You're gonna simulate it every day, guys. I want you to practice. Your simulator is the batting cages, and you can't strike out at the batting cages. The fourth ball comes, right? It's like the driving range. If you're a golfer, you can't get a triple bogey on the driving range. There is no fear of failure, right? It's just lessons. So the more you simulate, the more lessons you get, the more repetitions you get, the easier it becomes, the more clear it becomes. And we want you practicing the correct rules. Want you focusing on taking the correct trades that create advantages rather than trying to become a simulator millionaire. And we've all done it. In the middle of news, when the market's railing, we're like, I'm just going to go long. And we make $1,000, but our brain believes that we really made $1,000. And we're teaching ourselves long-term failure like that. And then we're going to simplify very much today, guys. We're going to simplify to two trades. We're going to focus on the high probability trend trade first, identifying the advantages, understanding the entry, and I really, really, really want you to focus on the entries for the high probability trend trades for 20 trading days. That's it. 20 trading days getting into the market at the correct spot, because when you enter at the correct spot, it creates manageable trades. You have to learn the looks so they become easy. That's where repetition comes in. That's where experience comes in. The only thing Nexgen cannot provide new users is experience, right? I'm going to give you the greatest software ever. I'm going to give you what I think is some pretty darn good education and teach you how to read your indicators. What you're going to have to do is get the reps, go through, keep practicing and taking pictures until it becomes easy. And that's your step-by-step path to becoming a confident trader ASAP. It begins with posting pictures in the room. You'll notice that D-Rock just put a couple pictures. Safia posted a picture. Debbie posted a picture, guys. What they're doing is they're saying, hey, Mark, this is what I did. This is why I did it. Do me a favor. Let's have a conversation and make sure that I'm reading the indicators right. If I did something amazing, we're going to praise it together. We're going to be like, yes, this is awesome. Great chart read. And if there's a mistake present, I'm going to say, hey, D-Rock, I want you to notice right here on your question about odds favorable momentum, and let's talk about that look for odds favorable momentum. And there's really only one look, and what's going to happen is D-Rock is going to get clarity from the question that he asked. We did answer your question yesterday, D-Rock, after you split, so don't forget to post those charts in today so that we can answer them today. It was a great question. It actually spurred some great discussion. So guys, posting your trades in class every day is really going to be the cornerstone for what you're doing. Don't be shy, right? Nobody knows who you are except for Bobby and the Klingon Tim Copeland. Nobody knows what you look like. They're not going to see you in the grocery store and say, oh my gosh, there's that guy that took the horrible trade in class. Let's go ridicule him by the lettuce, right? So there is no fear. Just get out there. It's being anonymous on the internet. The second half of it is using your spreadsheet, guys. And Nexgen provided you the spreadsheet when you downloaded the software. It's in your Nexgen Study Picks folder, and it has 3 tabs. The first tab, in my opinion, is going to be the most important tab for growth, and this is where you're going to track everything that you do. Every trade that you take, you're going to drop into this spreadsheet, and you're going to talk about the rules, what kind of trade it was, and there's a notes section, so when you get feedback, you can put, oh my gosh, I traded into a termination condition that I didn't realize, or maybe I made a mistake recognizing momentum. And what you're going to do is you're going to take 5 minutes out of your morning. You're going to pour a cup of coffee, a cup of tea, right? You're going to have a glass of OJ, toast a bagel, and you're going to look at yesterday's trades and you're going to say what worked. You're going to recognize patterns that are bringing you success, and then even more importantly, what didn't work. What are the things you're doing that are removing that success from the plate, right? Whether it is termination conditions or fighting the trend or whatever the mistakes that we all make as new users. What felt easy? And typically when you're following the rules, it really is easy, guys. It feels good. And then what feels forced? What makes you nervous? We all get sweaty palms when in our heads we know we're breaking our rules, but we just want to see what happens, right? We know that we're going against the system, that we no longer have a statistical advantage, and your body reacts instantly. But this brief historical study each morning is going to prepare you for the day, and it will accelerate the learning, guys. So embrace the idea that really take 15 pictures a day, minimum. I want to see 15 pictures a day. You don't have to post them all in class. Um, Post the ones that you need help on, right? But take 15 a day for your own personal study. Put at least 15, or if you take 15 trades, they all go in the trade journal. If you take 4 trades, they go into the trade journal. I typically take between 4 and 8 trades a day. That's it. That's my whole thing. So if you fill up 3 pages in one day, you might be over trading. Um, you have to learn the looks so that they become easy. So when you post in the room and you say, hey, Mark, I want you to check this out. Mark, I have odds favorable momentum and everything is screaming down. And I entered right here and I got stopped out right here. And you're going to say, hey, Mark, what did I miss? Right? What did I miss? Well, the only thing that you missed, David, is that when price reaches a divergence low and both trigger lines don't break through it, it's a termination condition. This is one with the potential to break, right? It has the potential to break because of the momentum, which means that this is no longer a high probability trend trade. It goes into what we call a medium probability trend trade when an issue exists. And David, can I be real honest with you for a second? Whoops. With this amazing termination condition, with this level of momentum, with the small triggers through the area, David, you nailed your entry 100%. And this is about the best of the best look you could ever take on a medium probability trade. So even though you got stopped out for a 6 tick loss, who cares, right? David, you gave yourself a statistical advantage. You took, in my opinion, the absolute best look that you could ever take for a medium probability 50-50 trade. So if you take this trade and you lose it, David, you are probably going, what did I miss? What did I do wrong? Why is this so bad? Oh my gosh. And then you present it in class and we're like, David, holy crap, I would have taken this trade in a heartbeat because every condition suggests that that market's going to continue down, but the people in control chose not to. Does that make sense, David? And we can come back to it when we look at it. Outstanding trade. It just didn't work. And guys, that's a very real part of day trading is every trade's not going to work. You're not going to have 100% winners. Stop gauging your own value on the trading. You're not in control of it, guys. David, beautiful trade. And you know what it shows, David, more than anything? And guys, this is the victories that I like to celebrate is it shows that you took yesterday's lessons and you absolutely nailed the two chart process and hit your entry like a boss. And that's where you were struggling a little bit. So fantastic work. We knew it would click. Now it's just repetition. PFI, it was a 50-50 trade. The small triggers were through the area. We'll go back and we'll review it again after the rules, guys. But when you post trades in class, that's the feedback you're going to get. We're going to talk about what I see. We're going to talk about what you did. You're going to give me all the information of why you did it, right? You're going to annotate your charts and write your rules. What are you looking for? Why did you pull the trigger? Show me your timestamps. Show me your prices. Let me line it up. And guys, show me your entries. Show me your exits. Do exactly what David did. Point arrows to what you're doing, where you're getting in, where your stop placement is. Because the more information you give me, the better my feedback will be for you. And the better the feedback, the quicker you're going to get to where you want to be. So help me help you. Post your trades. Use the spreadsheet. And guys, on the spreadsheet, the third page, this is all of your stuff. This is where you guys presented in class and gave me beautiful entries, right? Great management, all sorts of stuff. And I stole them from you because when you do something great, I just want to kind of become a better trader. I want to ride your coattails a little bit. So I just put this spreadsheet, my personal spreadsheet, into the room for you. Please steal it. Take this afternoon and look at all these trades presented by clients. And what you're going to notice is that they all revolve around the three advantages that we're going to talk about in the high probability trend trade. And the high probability trend trade is three rules. That's it. Only three rules. That's okay, D-Rock. I'm going to get all of them. And for those of you that are new as well, my first hour is dedicated to teaching you the trigger line and the Fibonacci rules for when it's okay to trade. The second and third hours are when I start looking at your charts. I use David's as an example for feedback. So I'm going to get into all your amazing pictures when we're done going over the rules because every time I look at your charts, no matter what kind of trades you take, I'm going to relay them back to momentum, a clear path, and an entry area. This is the criteria for me every time I enter a trade. You will deviate as you become better as a chart reader, but if we go back to this every time, everybody gets the lesson. So this is the recipe for a trade, guys. The first key is momentum, and that's going to come from your large chart, strong triggers. The next is your clear path. Once again, your large chart, none of those areas likely to stop. And then we're going to refine the process and find the entry area. So these three rules for the high probability trend trade, let me put them in the room for you, are going to happen on only two charts. Simplicity, right? Take a deep breath, eat half a Benadryl. Don't really. I'm not telling you to take medication. Let it be easy. Let it be simple. Large chart. Guys, this large chart on one bar, this one bar on the large chart, the most current bar, is going to define direction, momentum, and areas. The large chart's a broad stroke of the brush. It's showing an overall opinion of the market. It is literally showing you what the people who move the market, the large crowd, the people that create trends and momentum, this is what they want to have happen. One of the biggest advantages you can give yourself is go with the flow, right? Go with the flow. If everybody that controls the market says that they want it to go up, guys, go up, right? Trade with the trend. And then your smaller, faster chart, your refinement chart, after your first two rules are met, is going to find that entry, that point where the market is most likely to continue. And by using this little refinement chart, what happens in this one bar happens in 15 to 30 on a small chart. You are literally going to let a small crowd, a group of yahoos that want to buck the system, push us right back to the perfect entry, right where the market is likely to continue. But the reality is the large crowd typically wins about 70 to 80% of the time. So we're going to keep it simple. Two charts, three rules, one trade focusing on nothing but entries for your first 20 days. Is everybody okay with that? You're going to say that you are, and then you're going to try and find all the trades, and that's cool. But this is your path to success, guys. This is the path to becoming a confident trader ASAP. And it all starts with odds favorable momentum. So rule number one says, on a large chart, where'd that picture go? On a large chart, we must have strong triggers. So we're going to define strong triggers, but before we do that, I'm going to tell you guys something. You cannot have strong trigger lines on a large chart if you're fighting the trend. It's impossible. It can't be done under any circumstances. There are no exceptions to the rules. If you're fighting the trend, you can't have strong triggers. So let's define the trend first, guys. If the background on your large chart is green, we're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. And if the background on the large chart is red, we're in a downtrend, and you should only be looking for rules to be met for high probability trend trade short. Guys, this is the first advantage that you're going to give yourself, honestly, even beyond those rules, is always going with the flow. Fighting the trend rarely works. And let me show you how easy it is to recognize. This is the S&P, guys. What direction is the trend on the S&P? You don't need to look at any indicators. You don't know how to read them. All you need to do is look at the background color. What direction is this market trending? Anybody? I know the answer. Nobody. Cool. Anybody on this one? Crude oil. What direction are we trending? We're trending down. Absolutely. Guys, you don't have to participate. You can just sit there and listen and hope you become an amazing trader. And then once again on the NASDAQ, we're in a downtrend as well, guys. Just for the record, the S&P was in an uptrend because the background was green. So once you've identified the trend, you're going to look for strong trigger lines. Trigger lines are just momentum indicators, guys. You have the small triggers, which are two lines, and you have the large triggers, which are these dashed lines. In order to have odds favorable momentum, the first thing, and this is an absolute, is they both must be wide and angled in the direction of the trend. D-Rock, there's your answer from yesterday. Both small and large in an uptrend must be wide and angled in the direction of the trend. When the small separate from the large and the space is created between the two, this is your strong trigger look. This is your best of the best. This is the highest momentum that you can have. This is the look that lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a phrase that you're going to hear every day, guys. And when you have odds favorable momentum, it is the best, most favorable time to buy a pullback to Fibonacci support on that smaller, faster chart. On the large chart, it looks like a tail or a wick. We don't trade tails and wicks, guys. We use a smaller chart to refine it so that you can pinpoint exactly where that tail is likely to form. So in a downtrend, it's the exact same thing. Small triggers and large triggers must be wide and angled in the direction of the trend. And the space created between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. I want you to picture in your head scissors. When scissors are open, they can cut, right? Time to get some work done. When scissors close, you're just taking a stab at things. You're not actually getting work done, guys. And when they close, when those small triggers work their way inside of the large triggers, this is a weakening of the large triggers. This is anything can happen up or down. Your advantage of momentum goes away, guys, and it becomes more of a crapshoot. So, pretty simple look, right? Separation means odds favorable momentum. Small's inside of the large. Anything can happen. So I know you guys hate to participate, but do I have odds favorable momentum on the S&P right now? Are they both wide and angled in the direction of the trend? So David says yes, and D-Rock says no. That's exactly what I was hoping for. Odds favorable momentum, David, means that these large triggers, remember, we're only looking at the most current bar. We're not looking at the momentum that was there. We're looking at the momentum that is there. And see how the large triggers are turning? It's not down. So David, great comment. It means that there may be times where you don't have odds favorable momentum up or down. Does that make sense? Hey, Lady P, nice to see you. Sometimes we're in a transition period. Sometimes we just have to wait. So while the smalls are down and the large are flat, I don't have momentum to the downside, but I also don't have momentum to the upside. 90% of what we do every day is sitting on our hands waiting for that advantage. How about on crude oil? Do I have odds favorable momentum to the downside? What do you guys think? Brand new users. Smalls below the large are wide, they're angled in the direction of the trend. Look at the space. Holy smokes. Guys, that's odds favorable momentum. This is the ideal look. So Manpreet, thank you for posting no. Guys, if you posted no in the room, or you posted yes in the room, you should save this picture because this is your odds favorable momentum look. It has to look like this. I'm not trying to trick you, right? In order to have odds favorable momentum to the downside, if everything is wide and angled down and there's space, it's there. And if everything is wide and angled up in their space, it's there. And you're looking at the most current bar. So if I snap this picture of the trigger lines, it's this space between the two. But Manpreet, we're not talking about termination conditions yet, right? We're only talking about the momentum, but you do get a gold star because you're absolutely right. That's an area likely to stop the market. But remember, we're going to do this sequentially. We're going to focus on one thing before we ever get to the second. So I see where your head was going there, Manpreet. Guys, odds favorable momentum, right? It's the first part of the equation. There it is on the NASDAQ. Odds favorable momentum. There's one of those tails. There's one of those tails. These might have been entries. But I want you guys to embrace the idea that odds favorable momentum should always lead the way. This is your best of the best. This is what covers mistakes, honestly, a lot for a lot of us. But odds favorable momentum doesn't happen all the time. And David pointed that out beautifully. He goes, it's not odds favorable momentum up, Mark, but it's not down either. That's a transition period. That's when the buyers and sellers are fighting it out. That's when the large crowd, both sides of it, can't figure out who's going to win yet, guys. This is Mike Tyson and Evander Holyfield liquored up in your favorite bar, fighting for supremacy, biting ears. And as a next-gen user, you don't have to jump in the middle of that and get knocked out. When your triggers don't agree with one another or the trend, Sit on your hands and do nothing. The advantage of momentum isn't there, but what you're going to find is odds favorable momentum pushes the market in the direction of the trend. Anything can happen triggers typically precedes a reversal. Odds favorable momentum, there's one of those tails. Anything can happen, there's a reversal. Odds favorable momentum, one of those tails. Tyson and Holyfield going at it in the front lawn. Let's stay out of the market and see who wins, because eventually they're going to give us odds favorable momentum. So 90% of your day is spent waiting for advantages, guys. And the first advantage that you wait for, the first advantage to set up looking for that trade is the advantage of momentum. Is everybody comfortable with this idea? If you're brand new, it might take a couple days, guys. I'm not going to lie. But if you let odds favorable momentum on the large chart lead the way, it's going to take a lot of the problems out of your trading. It really is. And once we have it, Manpreet set us up. It was the perfect segue. We have to make sure that there's nothing in the way. We have to make sure that termination conditions are false. Because when there's room to my profit targets, I have a clear path. This is also on your large chart. Guys, we've never even looked at a small chart yet. We're only looking at the large chart now. So on the large chart, we're going to look for a termination condition. And termination conditions defined, guys. It's a Fibonacci-based indicator that may reverse the market. These areas that may reverse the market. Red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1 dots. It can be these magenta divergence highs, and it can be these cyan divergence lows. These are all areas where the people that control the market are going to react, guys. These are the areas where the people that move the market, that create the momentum, might be taking profits, might be entering trades. I like to think of them as the place where decisions happen. We don't have to be a part of the decision-making process, guys. This is where Nexgen users can sit on their hands and wait and see what decisions are made. So when you look at these areas, they may reverse the market. I put that in the room for my new users. And in order to determine whether or not they're likely to stop the market, likely to create crazy bounces, likely to reverse it, it's a two-part process. And the first part is price reaches the area. These dynamic Renko bars that show you price. They come down and they reach Fibonacci support. That's the first part of the equation, guys. Price reaches the area. Because price is what's happening in the market. So in order for us to be at a decision-making area, price has to get there, right? That's when the decisions are made. Price reaches the area. All you have to do is ask yourself, where are my trigger lines? If your trigger lines in this case remain above Fibonacci support, all you have to do is no longer go short. Say to yourself, a decision has the potential to be made, and I'm going to do absolutely nothing until I can gauge what that decision was. And guys, this is going to keep you out of an awful lot of losers. My biggest problem as a brand new user was trading into areas likely to stop the market, and it stole my money more than I care to admit. Look at the giant reaction right off of that fib, guys. This is a textbook termination condition. This is an area that may stop the market. I will cover that one, Snorri. Give me just 1 second. So if we can identify what stops the market, right? If price reaches an area, in this case resistance, if none of the triggers have gotten through that area, it doesn't matter if price does. The only thing price does is reaches it. Then it's all on the triggers. If the triggers don't go through the area, sit on your hands. The path isn't clear. It is a termination condition. So there's no reason for us to guess or hope. The area will be broken once the small and the large get to the other side. So both lines of the small, both lines of the large, when they clear resistance, it will begin to act as support. With that odds favorable momentum, there's one of those tails, one of those potential entries. So guys, as a brand new user, I want you to keep it so simple that it's going to be difficult to make a mistake. It's going to be difficult to overthink it, right? If price reaches an area and no triggers break through, sit on your hands and do nothing. It's either going to reverse or it's going to break. The area is not broken, the path is not clear until both small and large get to the other side. On that same token, areas break all the time. Fibs break. One-to-ones break. Divergence highs and lows break. They typically break with odds favorable momentum, with the absolute best, strongest push in the market that you could ever hope for. So if no triggers, no clear path, right? Both triggers, clear path. When half of the triggers, 50% of them, the small triggers, break through an area with odds favorable momentum, but the large triggers lag behind. This is what we call a 50-50 look, guys. This is 50-50 is referring to half of the triggers through, half of the triggers not. It has nothing to do with the chances of winning. It has everything to do with an area that has the potential to break because of the momentum. This is not a high probability scenario because the path isn't clear, the area isn't broken. This is going to be your first what we call a medium probability trade, and I'm going to give you a plan for taking it with the highest level of success. A medium probability trade means that most of your indicators line up for the trade however a problem exists. In this case, your problem is that you don't have a clear path, which means you should insist on momentum and you should insist on the perfect entry area. Areas break all the time, but areas with the potential to break also hold all the time. So this takes you outside of that 70 to 80%. This takes you to that medium probability trade. I'm going to give you a plan for taking it. Is everybody comfortable with the basic recipe? Price reaches, no triggers, no trade. Small and large get past, the area is broken, the path is clear. And if we go back to the live market, price reaches Fibonacci resistance, absolutely no trigger lines break through. Guys, this is a textbook termination condition happening right in the moment from the most current bar. All this means is that I have to sit on my hands for a second and see what the reaction is. Is it going to break? Or is it going to hold? Or is it just going to stutter around the area for a while they make a decision? You can see down here, price reached Fibonacci support. None of the triggers got to the other side. Support pushed it all the way up to resistance. And if you scroll back on your charts, you're going to begin to see this a lot. Reactions off of fibs, and sometimes reactions from nowhere. But look at this, to the tick. To the tick. So your job is to study this and develop faith and trust in these silly little lines, potential to stop the market, to ruin your day by creating a bounce that you can't trade. Look at that, off the fib. Guys, they are like freaking magic, and you never have to take these losers if you just respect rule number 2. I love it when the live market gives me examples of the lesson right in the moment. So here is what we call the divergence stop out, guys. The pivot stop out of a divergence low. And Snorri, we're going to answer your question right now. Cyan divergence lines can be termination conditions, guys. What divergence means for my brand new users, divergence equals loss of momentum. That's it. And we can recognize that this divergence is true, that there was in fact a loss of momentum, meaning that price railed all the way down and formed this pivot, but momentum, and this is written in the background using MACD indicators, didn't follow. That's all it means. That's what creates this pivot. The calculations for this pivot to become true happen somewhere right about here on this bar. So this line on its own is not a termination condition because price didn't reach it, price creates it. But when price comes back, here's the recipe again. Price reaches the divergence low, exceeds it a little bit, all my triggers stay above. Now I have a pivot stop out of divergence lines condition, guys. And we're going to label this one in class. This is what we call a PSO, a pivot stop out. And a PSO is an awesome termination condition because price reached the area and the triggers remained above. Give me a Y if you're with me. The recipe never changes based on the line. It's always price gets there, triggers stay above. Snorri, did that answer your question? It's really on the third bar that it happens. Now we have a termination condition. And this termination condition created a full reversal. So I'm going to call it a strong bottom. And a strong bottom is the precursor for the absolute highest probability trend trade that you can take, guys. So this one kind of reminds you that price has to reach it, not create it. And then we ask, where are the trigger lines? So I'm going to put that in there just for the reminder of what divergence is as well. This next picture reminds you, whoops, that was the wrong thing, wasn't it? That only put the PSO message in there. This next one is going to remind you that 90% of your day, guys, is spent reading indicators. 90% of your day is waiting for advantages. I like to take pictures of the pictures from the guide and walk through them. Guys, if you ever have questions, please interrupt me. It's a very quiet class today. That always makes me nervous. Price reaches Fibonacci resistance. When price reaches resistance, absolutely no trigger lines break through. Guys, this is a termination condition. The divergence line is not a termination condition because that wasn't printed until down here. So resistance is acting as a termination condition. And then price comes all the way to Fibonacci support, all the way to that midband. None of your trigger lines break, therefore Nexgen users are choosing not to go short into this line. It may reverse the market. It may create a bounce. Decisions are being made. So there's two termination conditions that kept you safe. And then price reaches Fibonacci resistance. No triggers break. It's a termination condition. Price also reaches that divergence high line. No triggers break. It's a second termination condition. Price reaches the second level of resistance. No triggers break. That's three terminations in the same area. It's not only a pivot stop out, but it's two levels of Fibonacci resistance. Guys, this is a lot of power here at the top. And when this top creates a full reversal, that's now a strong top. And when that full reversal gives me separation between the small and large, wide and angled in the direction of the trend, and when it's wide and angled in the direction of the trend, there's one of those tails for the highest probability. D-Rock, we've already established that you're in a different time zone with a different midnight, which means you're going to have different pivots that your software is calculating on. So you have to make a choice. You either have to change your computer or you have to be okay with different looks. Sorry. Sorry. And then guys, this is going to be one of those potential entries for the highest probability trend trade that happens after a termination condition. You had to sit through all of this to get to this rules-based entry that probably took you to your daily goal. 90% of your day is going to be spent sitting on your hands waiting for advantages. This picture, odds favorable momentum directly into Fibonacci support through one-to-ones. These yellow one-to-ones are in the way. Price reaches it, none of the triggers break. Next-gen users are not taking the short. Next-gen users say there's absolutely no way on God's green earth that I am going to go short into an area that none of the triggers are broken. This is your safeguard. And then you're going to spend the next 18 minutes being thankful that you did, because from support, the buyers pushed right up and none of my triggers got through resistance, and the sellers fought back, and the buyers fought, and the sellers fought, and the buyers fought, and the sellers fought. And guys, there's no reason to get caught up in this nonsense. There's no reason to give away all your hard-earned money while the people that control the market fight. But if you were patient, this termination created the reversal in the market. This reversal got us above resistance, small and large. It began to act as support. The small triggers were outside of the large, and look at that. There's one of those tails. There's that potential entry for the highest probability trend trade you can take, and that's the one that goes the distance. That's the one that typically wins 70 to 80% of the time. Guys, that's your lesson on termination conditions. Price reaches, no triggers through, just sit on your hands, wait for the reaction. It's going to keep you safe. A lot of the times you're going to see the market with a clear path, and it's going to go up anyway. You're going to see the market with odds favorable momentum in a clear path, and it's going to come down, and you're going to be like, oh my gosh, but the rules were met, Mark. And there's one more termination condition that I want to talk about. And this one's going to happen on a smaller, faster chart. This is the only one that happens on a smaller, faster chart. Three divergences, three losses of momentum in the same price range may terminate the trend. And this becomes very powerful when your small triggers work their way inside of the large, when you end up with those anything can happen triggers. So three losses of momentum identified by the cyan line that prints from the low or the magenta line that prints from a high may terminate the trend all by themselves. It becomes even more powerful when you go from odds favorable to anything can happen. And then it becomes more powerful still when the third pivot from a low is higher than the previous, or the third pivot from a high is lower than the previous. This is a head and shoulders pattern, guys. So all of them are termination conditions, but they do kind of ramp up a little bit. Three of them may stop the market, may push it higher, may create a situation that's untradeable. Three with weak triggers is even more powerful, and then watching those pivots makes it more powerful still. This is not only a way for you to gauge when the market may be turning and you can't see it on your large chart, it also becomes an absolutely outstanding tool to manage trades, to be able to tell that maybe when your perfect short isn't going to go the distance. So you're going to see this look from a low or this look from a high. Let me copy this picture. At times when your large chart's moving too slow to point out that the trend may be ending in one of these spots. So guys, that's your termination conditions. This is rule number 2. It happens on the large chart. Here's one of those potential to break areas. The smalls are through, the large are not. This divergence low at 43.03 has the potential to break, but it's not guaranteed. But also 43.05 has the potential to break, but once again, it's not guaranteed. We don't know whether it's going to break or hold, right? All we can do is say that it has the potential. And then we look on our smaller, faster chart. If I gave away a clear path, do I want to give away momentum in the form of divergence? The plan that I give you says absolutely no. And most of you avoided this loser without forming an opinion. So, and what else do we notice? There's 3 of those divergence lines coming from the bottom. Holy smokes, guys. Patterns, patterns, patterns. I love it. So what do we do when we have odds favorable momentum on the large chart? When we have no termination conditions on the large chart, guys, we're going to turn our attention to the smaller, faster chart. We're going to go to that refinement process. We are going to take all those advantages on the large chart, and we're going to whittle them down, guys. We're going to take that one bar that's giving us momentum, that's giving us direction, that one bar that's making sure we're not trading into termination conditions, and we're going to refine it on the smaller, faster chart. And you're going to locate where the market is likely to continue, and that's going to be your point of entry for this highest probability trend trade. Meaning that when everything says down, when the momentum is strongest, when your path is clear, we are literally going to let the smaller, faster chart come up to our entry. And in a downtrend, or in an uptrend, excuse me, we are literally going to let that market come down to our entry point, because rule number 3 says that we're going to use a limit order to buy or sell a pullback, and that pullback is the small retracement in price that those yahoos create. Whoops, did I lose it? There it is. That's a retracement. Goes against everything that the large chart's saying. We're going to use a limit order to buy or sell a pullback at an area, and your areas can be Fibonacci support or resistance, mid bands, or yellow 1-to-1s, and not one of them is more powerful than the other. Fibs, mid bands, yellow 1-to-1s. We're going to buy a pullback to the areas, and they're going to be inside of favorable large triggers, meaning that your large and your synthetic have swallowed those areas. They're residing in the belly of the beast, and that becomes your entry for the highest probability trend trade. Favorable large triggers means that your large triggers and your synthetic triggers, which are just the large triggers from the large chart, are one on top of the other, overlapping, creating your absolute smallest window of opportunity. And the window of opportunity is where the market is likely to continue. Walter, a limit order means, great question. A limit order means that, let's say that I want to take a long position, Walter, but I don't want to take it from here. I want to take it from this blue line. I can right click and activate a limit order. And now if price reaches this limit order, it's going to put me in a long position. Of course, I don't want that because I don't go long into termination conditions and I don't go long without odds favorable momentum. And on that same token, if I right click above the current price, it'll give me the opportunity to take a sell limit, which means if price comes back, retraces to this area, I will be in a short position and my anticipation will be that the market continues down. Does that make sense? I had to learn that lesson too. Awesome. So when the large chart says up, the large chart says momentum, the large chart path is clear, this is the look on your smaller, faster chart, guys. You should have odds favorable momentum on your smaller, faster chart. Those small triggers should be outside of the large. You're going to identify your large triggers. Are they wide? Are they angled in the direction of the trend? Are they one on top of the other? Giving me that favorable best of the best look. And then you're just going to ask yourself, what areas are going to fall inside of those triggers as they come screaming up? Fibs, mid bands, yellow 1-to-1s. This is it right now. All we're doing is we're identifying where the market may continue. But we need a pullback. Rule number 3 says that we're going to use a limit order to buy that pullback, that little push against what the large chart says. And your pullback begins with a reversal bar. And your reversal bar is the beginning of the retracement. At the time of the reversal bar, you're going to identify from the highest point of your triggers to the lowest point of your triggers, because remember, the areas have to be inside, and just the areas that are falling within, fibs, mid-bands, yellow 1-to-1s. Use your drawing tool, build a box. From your highest point of support, the area closest to price, to your lowest point of support, the area furthest from price inside of favorable large triggers. This is why when you annotate charts, I think it's so important. Inside of favorable large triggers. Manpreet, don't worry. I promise I go through everybody's charts, but we talk about the rules first. I haven't seen your chart yet. Did you write your rules on the chart? Okay. So we'll look at them and I'll see if I can find anything. No worries. Absolutely, man. I got you. Guys, this is your look. Your limit order goes right at the top of the window of opportunity. It goes at the highest point of support inside of the window because your large chart is screaming to the upside. Your large chart has odds favorable momentum. Your large chart has absolutely nothing in the way to bounce off of. And this becomes your entry for the highest probability trend trade you can take. The high probability trend trade that happens after a reversal, a good top or bottom. This is the one, guys. And let's go through the whole process. Remember that your large chart has odds favorable momentum. Your large chart has nothing in the way, nothing to create a bounce. And we wait for the reversal bar on the smaller, faster chart. At the time of the reversal bar, you are going to spy with your little eye from the highest point of the triggers to the lowest point of the triggers. And you know that your areas for entry reside inside of favorable large triggers. And now you'll be able to refine even more from your highest point of support. Let me do this, which is a mid-band inside of favorable large triggers. The highest point of support is the area closest to price, to your lowest point of support, those yellow 1-to-1s. What you've just done is you've created a window of opportunity. You've created the point where the market is most likely to continue. I was going to thicken that line. Your entry order, your limit order is sitting and waiting right at the highest point because of the momentum, because there are no termination conditions, guys. Give me a why in the room. You may not master this in the first week, but do you at least get the concept? Are you comfortable with the idea that we're going to buy a pullback as the market's coming down? We're going to use areas because areas create a point for that market to bounce. And we're going to do it inside of favorable large triggers because these are just moving averages and price loves to correct itself back to the moving average, right? This becomes your high probability trend trade, guys. And then when the market comes down to the top of the window, you are in a trade. You are in a long position, and you're in that long position. Oh, my pictures are missing. Hold on. You are in that long position. Son of a gun. I lost my pictures. Hold on. That totally killed the flow, didn't it? You're in that long position with the advantage of momentum, with the advantage of a clear path, and with the advantage of an entry area. This is your high probability trend trade, guys. This is a trade that typically wins 70 to 80% of the time. Things that you have to think about as a brand new user. You're entering at the top of the window because of all the momentum, because of the clear path. But you've identified a window where the market is likely to continue. I want you to go ahead and get comfortable with the idea that it may go to the bottom of the window. It may push beyond that highest point of support because, sometimes a small crowd is a little rowdy. But you're still inside the window, and even if you're looking at negative ticks, you're still in that highest probability trend trade. We manage risk before we ever manage profits, guys, and we do that by identifying the window of opportunity, by waiting for the pullback, by having the advantages, and then placing a protective stop where the market shouldn't go. Placing a protective stop below the window of opportunity, 3, 4, 5 ticks below. And what that means for us is that if the market extends beyond the window, it's going to go head first into our protection. We're going to exit the trade and we're going to wait for the next opportunity. And now here's the one thing that I need to remind you guys of. And I do this every day, and I think this is so important. The high probability trend trade, right? All those advantages wins typically 70 to 80% of the time, which means that if you're taking that trade 100 times, 20 to 30 of them you're probably going to lose, and it becomes a cost of doing business. I want you to get comfortable with the idea that small losses are a normal part of a positive equity curve. And then, guys, I want to add one more thing to this, because I had this epiphany this morning from an email I received. 70 to 80% winners is a high probability trend trade. It's a high probability trend trade. It's one trade that we've talked about, right? If you start going beyond the high probability trend trade, if you begin to incorporate medium probability trend trades, you guys that have been with me for a while, isn't it realistic to expect fewer winners the more advantages you give away? Give me a why if that makes sense for you guys that are pissed off about your 60% wins. For you guys that are angry about your 50% wins. Guys, 70 to 80 is a reflection of the highest probability trend trade. That's it, the highest probability, one trade. If you want to achieve 70 to 80% typically, well, then maybe you should only stick to one trade, but that's not realistic for people. So what you do is you focus on the best of the best. You focus on this entry, this highest probability trend trade entry. You insist on understanding entries before you ever go beyond that, guys. And I think that's one of the most advantageous things you can do. Learn how to enter the market. I'm giving you this trend trade checklist, and this is perfect timing because news is about to print. This trend trade checklist goes over the 3 advantages, making sure that you have them in place each and every time you pull the trigger. I've never had anybody in the history of this checklist following only this checklist do worse than 70 to 80%. But here's the problem with it. It's boring. It means that you have to do nothing for 90% of the time. It means that you have to sit on your hand and wait for advantages. And the reality is, as much as we all convince ourselves that the only reason we want to be day traders is to make money, you're probably going to fight this. And you're going to look for all of the opportunities because it inflates your ego, right? Because it makes you feel like a badass, because it makes you feel like you're smarter than the guy next to you. That's normal. That's human nature. But trading is about winning. Trading is about winning more than you lose. It's about having a statistical advantage. This is a trade that typically wins 70 to 80% of the time. Make it your focus for 30 days. Learn how to become a chart reader. Here's the exact same checklist, but this one's broken down so that you can identify the pieces rather than the whole. What is a good top or bottom? Here's a video, and I'm going to encourage anybody that is brand new, anybody that's having trouble with termination conditions, to watch this video this afternoon. This is my brother talking about tops and bottoms, when fibs are likely to hold, when they're likely to break. It'll absolutely change your approach to termination conditions. And when they create a reversal, guys, that's your good top or bottom, and it's not necessary. But if you don't have a good top or bottom, we're looking for those divergences on a smaller, faster chart to manage. Do I have odds favorable momentum? Guys, if you have this on your computer, you'll never have to ask me what odds favorable momentum is again. Small triggers up above the large. Large triggers are wide. Odds are favorable. And then it reminds you what anything can happen is as well. You should be studying this every morning. Here's your termination conditions. No clear path with a clear path. When that area has the potential to break. And then guys, here's that window of opportunity. Here is taking all the advantages on the large chart and refining it down to the point where the market is likely to continue. I just dropped both of these checklists into the room. One to print out and put on your desktop, one to have on your computer to review every day before you start trading. And then finally, you have to have a plan, guys. New users, you don't have the reps to build a plan. I want you to be okay with that. You don't have the reps to build a plan. How could you? You're brand new. So I'm providing you a plan. And this is a simple plan for consistency, guys. But this is just a stepping stone in your learning journey. This is the beginning. It's designed to optimize your chances of success with a high probability trend trade and that 50-50 trade, that might break medium probability trade as a new user. But through simulation, study, class feedback, and continuous practice, you will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Snorri, can I put you on the spot real quick? Snorri, following this plan, what's your win percentage right now? D-Rock, I know you're following this plan. What's your win percentage right now? If you don't mind sharing. D-Rock's at 75%. Snorri's at 79%. Why the hell are you guys chasing more trades? All right, sorry, there's my soapbox. Everything starts with never fighting the large chart direction or triggers, guys. This eliminates about 70% of the losers that new users take. Promise you. And all you're doing is defining your entry, getting in at the absolute best of the best spot, getting in at the spot where the market is most likely to continue. Because great entries create manageable trades. Great entries put you in a position to make money even on the trades that don't go the distance. So your entry is mechanical, your entry is methodical, your entry is pragmatic and does not revolve around emotions or hopes or wants or fears. It's simply if then. If my rules are met, then I enter the chart. I enter the trade. And the rules are designed to get you in at the best of the best spot. Seeing so much more in Traders Chat, that annoys you, right? So, I had this conversation with someone this morning, Snorri, and I'm going to tell you right now, one of the most dangerous things that you can do as a new user is try to trade the way somebody that's 8 years ahead of you trades. So you guys see Nexgen Ben over there, right? And I'm telling you, Nexgen Ben is killing it. He makes millions a year with Nexgen software, easily. He probably makes close to $500,000 a month with what he's doing. The part that Nexgen Ben doesn't broadcast is that Nexgen Ben spent 3 years screwing it up. 3 years losing money, 3 years breaking rules, 3 years not writing a plan, 3 years aggravating himself almost into submission. And he stopped trading for a year. And then he came back and he pulled his head out of his ass and he traded a plan. And if you look at his stuff, you'll notice that it's the same darn trade every time with very little deviation. If you look at, he's in the Traders Chat, D-Rock. He trades just a momentum style trade, and he trades 20 accounts, and he averages about $15,000 per account a day. That's his goal. He takes 2 or 3 trades a day. That's it. But Snorri, have you noticed that he only takes 2 or 3 trades a day? It's not more trades, guys. It's the best trades. So define your entries, keep it mechanical, get in at the point where the market is likely to continue. And then you have to manage it. Then you have to do something with that great entry. So your management plan, as you learn to read your indicators, should be just as mechanical as your entry. It should be nothing more than if-thens. It allows you to remove the emotion. And every great entry creates a manageable trade. And every great entry starts with an area inside of favorable large triggers. And when you take that amazing entry, your stop goes outside of the window where the market shouldn't go. And there's only two options at this point. Either your stop gets hit, totally okay. It's a cost of doing business. Nothing wins 100% of the time. I've never seen it. Greatest traders I know take losses. It either hits your target, you dust off, and you say, you know what, I'm going to look for the next opportunity. Thank goodness I cut my losses short. It's going to let my winners do more. Or the market blesses you with a reversal bar in the direction of the trade. And when it does, you're going to reduce your risk. You're going to reduce your risk above that reversal bar, guys. So now you're managing risk and you still haven't taken a profit, but you're lessening the damage should this trade go against you. And it still may. You still might take a loss. Or with all that momentum and a clear path, it's going to hit your first target. And if it hits your first target, it's only $100. Guys, you're on simulator, you're working on entries. You're developing a management plan through chart reading. It's $100. $100 is success, and confidence comes from the memory of success. $100 in your account they can't take from you. You just got paid. NinjaTrader told you you got paid. There's money in the bank. You feel great. Your sweaty palms start to dry up, right? Your heart rate starts to drop. You're like, oh my gosh, I did it. I took a trade. Women are going to love me. Men are going to want to be with me. You're going to want to be me. Children will sing songs about me. Whatever goes through your head when you're having a great moment is what happens at $100. And you're going to move your stop to break even. You're going to take 100% of the risk off of this trade, which means that you got paid and there's nothing to lose. And guys, the only reason we do that, the only reason that we go to break even at $100 is because the large chart leads the way. The large chart had direction, momentum, and areas, and your small chart is nothing more than an entry chart. And it makes it easier for you to allow the large chart to do its job. It makes it easier for you to sit on your hands and do nothing. You will get stopped out of a lot of break-even trades as you begin to develop this management plan, as you start to do it. But the reality is, with all of those advantages, typically 70 to 80% of the time, this is going to be your result. With everything in place, this is going to be your result. What does that mean? If you take 100 of these, 20 to 30 of them might lose, right? And that means that you're doing it right. That means that you're on pace. If you follow the rules perfectly every time, that's it. So if you take one loser, it's okay. Did you follow the rules? Focus on the execution and keep it pragmatic. And guys, $300 $300 a trade. Let's say you did this once. And I'm going to do some math real quick. I'm going to pull up a calculator because I suck at math. I really do. English Lit major. So we'll use one of the traders from the traders chat approach to trading, okay? Let me put this where it belongs. If I make $300 on a high probability trend trade with all the advantages, and I'm really comfortable and I'm doing it, and I use what's called a trade copier. And that's what a lot of the successful people over in Traders Chat are doing, is this one trade that they took that they made $300 on, they're taking that same trade on 20 accounts at the exact same time. And it turns into a $6,000 trade. Just one trade, one chart, right? Two charts, three rules, one trade, $300. You can buy a trade copier, and if you're doing something like Apex, you can trade up to 20 accounts. That becomes a $6,000 trade, guys. And if that $300 on 20 accounts is all you do for the day, I think 150 a contract is a very doable goal, don't you guys? What is that 5 days a week? What kind of month does that create for you? And how many months are in a year? Guys, if my math is wrong, correct me, please. I'm not saying that you're going to make 1.4 million this year, right? Because you're probably going to lose a lot as you learn, and that's okay, which is why we stay on simulator. But that's from a $300 trade using nothing more than the trade copier. It's the same trade. You're not trading 20 accounts. You're trading one account that's mirrored 20 times. And I think that this is what I want you guys to remember. That 1.4 million is based off of a two lot at only $150 per contract per day consistently. Does that make sense to everybody? We're not looking for every trade. We're not looking for every move. Every move isn't ours, guys. We're looking for the best moves. We're looking to manage our risk, and we're looking to make money. And I think that that's the realization that every trader has to come to at some point, that you don't have to get all the money, just get your money. So give me 20 days getting in at the right spot, guys. Give me 20 days learning how to manage your risk. Give me 20 days of learning to be a chart reader and recognizing advantages. And here's my promise to you. For every one of those 20 days, I 100% commit myself to giving you feedback on every picture that you post in the room. So the decision is in your court. You can post pictures and get all the feedback and end up where you want to be ASAFP, or you can do it on your own, which is cool, but it's going to take you longer. So somebody posted in the other room yesterday, momentum trades are kicking my ass. That was a direct quote. So if you're taking a trade that you keep losing, I have to ask you, why the hell do you keep taking that trade? Are you taking it because the people that trade better than you are taking it? Are you taking that trade because you don't want to miss a move? Because you're not taking the trade because it's paying you, right? Because you're losing more than you win. Take the trades that are bringing you success, guys. Take the trades that are comfortable, no matter what that trade is. No matter what the trade is. Take the ones that make you comfortable. Post in the room, get your feedback, and then we'll move forward from there every day. And remember, you don't control the market. This guy does. This guy creates direction, trend, and momentum. You're a remora. When he gives you advantages, you piggyback on his hard work, and then you get the hell out before he makes a decision, because his decision may ruin your trade. So, D-Rock, do I have odds favorable momentum to the upside? That's your picture from yesterday. Nope. Because both trigger lines must be wide and angled in the direction of the trend. PFI, do I have a clear path? Is he in here? He's not in here. Guys, do I have a clear path to the upside? Price reached Fibonacci resistance and all the trigger lines remain below, just like they did here. Telling you guys, your rules are designed to keep you safe. Clear path on the NASDAQ? What do you think? I say no. It really is that easy. I promise. It really is that easy if you allow it to be. So guys, I'm going to take a break. I am going to run to the other room and congratulate my wife. She passed her 7th class on her MBA yesterday. I'm going to brag about my wife for a second. She passed her 7th class on her MBA. She is 4 weeks into her MBA, and she will have it finished in the next 4 weeks. I married up. I highly recommend you guys do that. It's pretty cool. Pretty cool. Sorry, I'm a very proud husband. I really am. I'm amazed. I can't believe she married me. 20 years, Snorri. I love it. We hit 25 this year. I am 51 and we hit 25 this year. So that's amazing. I do love love. 31, Gene? Heck yeah. 30. Yes. It's so rare, isn't it? When you tell someone you've been married 30 years, they're like, whoa, who does that? Debbie, stop showing off. Seriously. Just kidding, Debbie. 29. Outstanding. 37. Man. And you know what? Sometimes it's not with the first one. She had to make a mistake. 13. I love it. I love it, guys. Let them know what you're doing with trading. That's one of the biggest things. Let them know what you're doing with trading and let them know that it's a process and let them know that it takes time because a lot of times spouses believe that because you purchase software, you should be making $1 million that month and it puts a lot of pressure on you. Make sure you're very open with your spouses about your trading and the journey that you're on. Trust me on this one. So, guys, I'm going to leave this up. I'm going to go take a break. When I come back, we're going to start looking at your pictures. And remember, when I look at your pictures, I'm not judging you or your trades, guys. Your trading plan has to be your own. I'm going to be looking for momentum, for a clear path in an entry area. It's imperative that you tell me why you did what you did, especially if it's not a high probability trend trade. I can read your indicators. I want to make sure that you're doing it. And then the next thing that I want you guys to do, if you've never posted a picture in my classroom, I want you to take this picture, just grab a snapshot, right? And I want you to write on your chart what you see. That's it. There doesn't have to be a trade to be a lesson. I want you to use arrows and I want you to write on this chart what you see. And let's talk about chart reading a little bit, right? And if you guys want, everybody take this picture and tell me what you see. And then don't post it in the room. We'll come back and everybody posts it at the exact same time so nobody feels pressure if they see someone post something different. I'll be back in 5 minutes, and then when I come back, we're going to get into that second hour, guys. Back in just a second. Mic silence. Apologies for the delay. My wife flies out of town today, so I had to be extra nice to her on the break. Um, Gene, your ES was much different. So you want to go through it, Gene, real quick and see if we can figure out why? Wow, look at that termination condition that turned the market. And look at that termination condition that's turning the market. Holy smokes, I love it. Um, Gene, couple different things that I always talk about when people are looking is make sure that you're 10 days back like me. Um, One of the things that I do every morning, Gene, and not everybody does, but should, is I go through and under the database folder, I delete cache and tick so I have fresh data every day. A lot of people do that. And then check your timestamp and make sure that we're in the same time zone. Because if we're not, we have different midnights. And if we have different midnights, there's going to be different pivots, and that can create different fibs. Um, those are the three things that I always look for. And then if I can't get there, I'll reset my database. And if that doesn't get me there, the timestamp is different. So that's probably the challenge right there. Um, and guys, if it's not a work computer, if you can change your time zone on the computer, especially if not being the same as me bugs you, change your time zone. It will violate your software. You may have to get with tech. So don't do it in the middle of a trading day. So, all right. So I'm going to go and I'm going to start scrolling up to the top of the class. And we're going to start looking at pictures. And we're going to talk about advantages. So if you post it in the room, here it comes. If I miss your post for some reason, if I miss your post, do me a favor and say, hey, Mark, I think you missed it. And there's always a chance that I didn't even get to your post yet. So we'll know that too. But this was Safia, 8:20 a.m. Safia takes a different style trade. Safia looks for terminations. Safia, you didn't have a good bottom. That's okay. That sounds funny. I feel dirty saying that. This is kind of a pivot from nowhere, right? But you took three divergences and you got in. Little aggressive on the entry. I like the second entry as a more conservative entry. And you took it all the way up to the profit targets. Because it wasn't from a termination condition, Safia, this is a little more aggressive and a little outside of, because that red line really could stop the market cold, right? And continue the move, especially with odds favorable momentum. So just something to think about. And then Rockstar add-on. Nice job, Safia. I know that's a concept you've been working on. It's pretty cool because you nailed it. All right, who is next? Let's see what we have. I love looking at y'all's charts. This is always fun for me. And remember, one plan may not be the other. So this is everything says down, two divergences, pushes it up. And then Safia, you take your entry right at that pivot, right at the mid band, and take it down. It's just a great trend trade. It's a medium probability trend trade. And you took it perfectly, and you got out at the trouble. Even better. Great management. And guys, just a reminder, I scroll all the way to the top to get your pictures, so I'm going to look at a couple and then I'll come down and field questions if you have them. And if that means we have to rewind a little bit, that's no problem. All right, GWC showing us something right here at 8:59 a.m. Let's take a look at a large chart first. GWC. Hey, Dano, take care. Not paying attention to the third divergence. GWC, are you with me in the room? Can you help me out here? What kind of trade is this? And let me show you guys why I ask this, because what I don't really have is rules on here. What I do have is a mislabeling of a termination condition. Price didn't actually make it down to the area. Um, and I don't have odds favorable momentum. And my large triggers are down and my small triggers are up, right? And my mid band is here, but if my synthetics are down and my large are up, they're not inside of favorable large triggers. That's only two divergences, not three divergences. So the one thing that I don't have on this chart, GWC, are any rules for entry, right? So I'm always curious. How do you know what to avoid? How do you know what to look for? And this one fought everything. This one fought trend. This one had no momentum. It didn't have areas inside of favorable large triggers. And this one was pretty much problematic from the get-go. But when you write your rules on the chart, you can go through and say, oh my gosh, I didn't have odds favorable momentum. Oh my goodness, I didn't have an area inside of favorable large triggers. Maybe I should rethink my entries, and this gives me an opportunity to focus on patience just a little bit more. And then Miss Debbie from yesterday, everything says down. Debbie, getting on the momentum train, huh? Odds favorable momentum, let it clear, pull back right to it. Right now, you're making Safia proud with that entry. That is 100% her plan as well. That's a great momentum trade, not a high probability trend trade, but a rock star momentum trade. There is a termination that creates a full reversal. The full reversal gives odds favorable momentum. Safia says with such a strong bottom, even with this pesky fib, no divergence on the pullback, I'm going long and getting paid. Safia, beautiful. Perfect by your plan, execution, taking advantage of termination conditions that create full reversals, because holy smokes, it sure does give an advantage. Nicely done. D-Rock. Odds favorable momentum. So D-Rock, is it odds favorable momentum? Let's start there. Are my large triggers wide and angled in the direction of the trend? And this can be for anybody. Anybody can answer. Not really. Not even a little bit. So it's just no. Yeah, I like your fix there. So I don't have odds favorable momentum. That's the first thing. And man, when these are flat, this is a great lesson. When these triggers are flat, if you look on your smaller chart, you'll see that your synthetics are just flat. There's no momentum. That's okay. And let me tell you why it was a good read. Um, Not a high probability trend trade because it lacks momentum very much. Are you comfortable with that side of it? So it can still be a medium probability trade. It can still be a trade that has a clear path. It can still be a trade that has an entry area. You're lessening the percentage a little bit. So you do have trend, right? But you don't have momentum. All of your trigger lines are above support, and you are using that area to enter. So it's a medium probability shot at continuation. That's all it is. The sellers had something else in plan for you. The one thing that gets me on this though is if this fib doesn't hold at 93.81, right? If this midband inside of favorable large triggers doesn't hold, could we save 4 ticks per contract? And maybe say if it comes here. And the reason I say that, 4 ticks per contract is 80 bucks, right? Doesn't feel like a lot. 80 bucks a day is $400 a week, isn't it? Can you imagine $1,600 a month just from good stop placement, saying the market shouldn't go here, and if it does, I don't want to be a part of it. And that's somewhere around 15 grand, isn't it? That's how I think about it. If it doesn't go from here, I don't want the trade, which means that there's no reason. From 81, go to 77, give it 4 ticks, right? That's okay, you're learning. Management's the second piece of the puzzle, D-Rock. It really is. Would this divergence have made the trade 50-50? Absolutely. Absolutely, because the large triggers haven't broken it. Great question. Guys, give me a Y in the room, if that makes sense. The large triggers had not cleared divergence, therefore, divergence is still in play. And then you never got back to the midband. Great read. I got you right now, Manpreet. Let's take a look. All right, large chart, odds favorable momentum. Where is your entry? I can't see an entry. And I can't see the large chart for this one, Manpreet. Hold on. And it's blurry. Let's see if we can... all right, Manpreet, are you with me in here? I'm going to tell you what happened. Gap theory. So, Manpreet, the mid-band behaves as a termination condition, and that's okay. You're right where you need to be, and this is the one termination condition that a lot of people take a while to get. If the large triggers are a full bar away when price reaches a mid-band, the mid-band is behaving as a termination condition, and you're not going to trade back into it. So on your chart, what had happened is price had reached that mid-band. Let me get to the picture for you. And your chart looks very much like this one going the other direction. Even coming from a good bottom, price reached that mid-band, and when it did, it's hard to tell because the picture's blurry. But your large triggers had room for an entire bar to form before they hit it. That's the gap theory. And what the gap theory says to us is that you just don't take trades in between. And Manpreet, you didn't enter at an area inside of favorable large triggers. You entered at a mid-band floating in space. And look how price pulled all the way back to the large triggers, where you didn't have any areas. Does that make sense? And Manpreet, thank you for posting this. It did. It closed the gap to the triggers. It did exactly what we would anticipate it to do, to close the gap back to the large triggers, to close the gap back to the large triggers on the gap theory. And then Manpreet, your entry is above those large triggers. That's okay. Man, you're doing great. You're in a great spot. You recognize the termination condition. You recognize the momentum. You're trading with the trend. Anytime there is a full bar back to those large triggers, it's likely to close the gap. And even in here, I've got pictures of it. The gap theory. Price reaches a mid-band. If the large triggers remain below that reversal bar marker, we're anticipating it to close the gap. Gap theory right now on the ES. Price reaches the mid-band. See how the large triggers are below? Thank you for that, Snorri. See how they're all the way down here? It just means don't grab that long trade. Hey, no problem. Great picture, great post. Keep posting, man. We're going to get you exactly where you want to be, one step at a time. Thank you for sharing. It's hard to do that, especially when trades don't work. So great job. Thank you for that. We'll see you tomorrow morning. And then D-Rock, we saw yours, absolutely 50-50. And then David, we talked about yours in the beginning of class, but I want to show it again. Guys, this is that 50-50 trade. This is that trade where areas have the potential to break. Small triggers have broken through, large triggers have not. Odds favorable momentum. No loss of momentum on the small chart. Strong triggers, tiny little window of opportunity. Rock star stop placement. That's the one. If price has not reached a level but still a full bar away with gap theory, would you hold? I'm not sure what you mean if I'm in a position. But here's the cool thing, D-Rock, is you're creating rules. What you've just done is you've omitted that price must run into an area. Does that make sense? The whole gap theory revolves around an area being reached. The whole gap theory revolves around hitting something to create a bounce. Pretty cool, right? Isn't it funny how our brains try to change things just a little bit? So the first part of the gap theory is just like a termination condition. The area is reached. And then once it's reached, then we kind of look at it. And David, I just wanted to throw props one more time. If I go back to the KISS plan, and let me make it a little smaller here, and I want you guys to see this. This is a great way to police yourself. So David, if I take your trade and I put the rules for the 50-50 trade straight from the KISS plan, is the market coming odds favorable? Yes. Smalls outside of the large on the small? Yes. No divergence on the small? Yes. From a good top or bottom? Yes. Get in at the area. And you absolutely nailed it, David. And guys, if you go through the process of policing yourself every time you take a trade, especially a loser, David, did you have the highest chance of success on a medium probability trade? Absolutely. A lot of times, guys, this kind of helps a little bit. It takes the sting out of taking a loser, especially if you've done the study and you realize that the advantages are in place, and sometimes it's just not going to work out the way you wanted it to. I love everything about that trade. Makes me happy. And then Snorri posted up a picture for us. Let's see what he did. Gap theory, no long trade. I love it. Snorri, you are the gap theory king at this point. And then D-Rock, the one from yesterday. D-Rock, I have absolutely no idea about the win percentage on momentum trades. I don't take them. I don't study them. And I'm going to tell you right now that if you look at people's momentum trades, you could put 5 people in the same room and all of their momentum trades look different. So the only way, D-Rock, for you to decide whether what the win percentage is you have to create, let me show you, a set of rules. You have to create a checklist. You have to take the pictures. You have to do the math. Because I don't have pictures of momentum trades just because I don't take them. I don't know. Safia, what's your win percentage? Ron, what's your win percentage? Tony the Tiger, what's your win percentage? But they have to look exactly the same, D-Rock. Safia 70, but Safia has 3 or 4 different looks, right? 70 to 75. But that's about 3 different trades. Wouldn't you agree, Safia? Ron has pretty much one look, and that one's about 94% for him. So it doesn't really, so it's hard to answer the question, right? Because Ron's trade doesn't look anything like Safia's trade. So they can't possibly have the same potential outcome. That's all I'm saying with that. So um, define your trade and then just start taking those pictures. Yeah. And that's the cool thing, man. That's what we do is we just keep taking pictures. We just keep finding patterns that bring us advantages. And you'll know what your win percentage is. My win percentage at the end of the day is typically between 54 and 70, depending on how the day went. And I can make money on 50%. I can make money on 40%, guys, if I manage properly. And then who asked this question? Was this you, D-Rock? Gosh, you are asking absolutely amazing questions today. Um, so check it out. This area is broken. Probably Snorri somewhere between 5 and 10, depending on the day. Sometimes less, sometimes more. I've had days where I've taken one trade because that's all that's fit in my rules. And my rules are hyper conservative, guys. I'm going to tell you that right now. It would bore you out of your skull to trade my plan. My plan is essentially the KISS plan, like 99% the KISS plan that I give you guys in the room that I trade because I just want to win. I don't have to make $1,000 a day per contract to be successful at what I do. All I have to do is make about 250 a contract and then compound. So here's the great lesson for divergences on the small chart, guys. Snorri, this area is broken when the triggers break it, right? The same thing is true here. This area is broken when those large and small are above it. Do you see it? That's when it stops printing. So the same idea that we use for areas is going to be the same for those divergences, and that's going to help you out a lot. So once it breaks, we reset. At this point, we're reset once it gets above the areas. So one divergence here is your first divergence. Does that answer it, D-Rock? Good question. A lot of people wonder that. The same idea on areas. They're going to reset when they reset, when the triggers go through. And then D-Rock, you didn't have the red fib. Goes back to the timestamp. Gene, same thing. That timestamp will get you scrolling through. Gary getting in on it. Let's see what Gary did. Gary says, Gary's the only one that did it. When I said take a picture and tell me what you see, Gary's the only one that did it. Gary sees anything can happen triggers. It pulled back to support, no clear path, no trade. Gary, thank you for that. And Gary says, my rules weren't met, therefore there is no trade. And then Dano had to split, but let's see what Dano did. Dano says, weak triggers and 3 divergences. He's not taking the trade. Simple rules. I think that one of the greatest things, guys, is wins are awesome, right? It feels so good to win money. What if you didn't give that money back by breaking your rules? Full accountability. You initially thought you were hesitating, but you realized 3 minutes after turning on your computer you're not prepared to put on a trade, so it's not a hesitation. It's a high probability trend trade opportunity. You just got into the market, was not prepared to execute trades in time to take this one. That one fits your plan. You'll take it 1,000 out of 1,000. Alan, that's some great self-awareness. I typically get through my first cup of coffee before I pull it off a simulator. Awesome. Gene, it may have violated. It may have violated when you changed the time frame. So you might need to get with Jason to reset your software. Alan, this is awesome. But isn't it still a great lesson? Even though you were sleepy and didn't take it and you hesitated, but you went back and you annotated it and you said, man, if I woke up 20 minutes earlier, I would be in this trade. Great job, Alan. I'm the same way, guys. If you're not ready to trade, don't trade. When you open up your software, if you're making impulse decisions based on the first thing you see, unless you are a super sharp chart reader and your plan is 100% solid and you know it like the back of your hand, It can be difficult to do that. It can be difficult to just jump in and take a trade first thing. Know your own limitations, right? Great job, Alan. All right, Gene, replay on the NASDAQ. First time. Let's see what you're doing. It's an uptrend. It's a termination. Love the color change. Blue to white. Do you have a rule about blue to white, Gene? Do you have a rule somewhere that talks about the color of your charts? I don't know what that means. I really don't. I have absolutely no idea. Three divergences is a termination. I'm trying to figure out where you're at. That's a lot for me to process because you're identifying this uptrend, but this isn't here, right? And this isn't here. So I'm struggling to make heads or tails of it. You didn't take the trade because of a termination. Good job. I don't know what color change is. Odds favorable momentum. It can't be because the smalls are below the large. Do you see how confusing this is for me, Gene? Gene, how long have you had software? Can I ask? Just want to make sure. Because John's been doing this for 27 years and sees things that we'll never see. And I don't know if you know this, but John abandoned these. John abandoned these. They were a fun toy. Is everybody familiar with John Novak's affliction? I don't think a lot of people know about the disease he has. John suffers from HBNS syndrome, which means that he's happy, but he's never satisfied. And he's always looking for a better way, different patterns, all these different things, guys. You'll notice that right now his thing is using Fibonacci retracement tools in addition to the fibs, right? The same thing that he automated 27 years ago, he's using to measure again in the trade. I told him, I said, John, stop being a jackass. But he's happy but never satisfied. So guys, if you try to do what John Novak does, it may change 3 hours later. Do your plan. Yeah, so Gene, we all do that, right? We try to rewrite rules. We try to rewrite rules. We try to find more trades. I don't know what trade you would take here because I can't even discern the information. Let's look at the next one. Termination triggers roll, right? But it's a downtrend, the smaller below the large, and I'm coming from a fib that just had divergence. You're trading against large triggers, you're trading from below synthetic triggers, and you're not even trading from an area, you're just taking a blue bar. Continuation of what? That would be my question. Continuation of what? It can't be a continuation of a downtrend because you went long, right? It is a termination condition, but your large chart's not leading the way, Gene. And what you're doing here is you're allowing yourself to take long trades based on one trigger line on the small chart rather than allowing the large chart to lead the way. The other thing that I notice on this is that your small triggers are below a fib, right? Everything's below this fib. The smalls are below it, the price is below it. The large triggers are up, but your trend is down. I'm not saying that it's the wrong trade, but it fights a lot. Isn't it easier to just trade with the momentum of the large chart? And look at how you had to manage this one, right? You made a couple ticks on the second one, and you probably got stopped out because you're fighting so much. You're trading from below resistance, below large triggers, against strong small triggers in a downtrend, and you're letting one... I mean, these are still smalls below the large here. Does that make sense, Gene? I'm not knocking your trade. I'm just saying that you're fighting so much. So much. Ugh, headache. But check this one out. Odds favorable, clear path, pullback. Holy smokes. I bet this one was easy. Didn't this one just make you go, ah, let's get paid? Triple dog dare him to come get my stop because every chart agrees for the direction of the trade. And this is where we all have to ask ourselves, do you need more than this to make it happen? And you're absolutely right, Gene. NASDAQ is an absolute beast. The large chart rules are the same, and it's so imperative that you follow those large chart rules. But the small chart entries are a little different, and we're going to talk about that because Snorri wanted to talk about it today. And Gene, I think it'll be a great lesson for you as well, and really anybody that's trying to get into NASDAQ trading. The rules are the same to get into the market. The rules are the same. The large chart has to lead the way. Odds favorable, no terminations. Triggers are coming up and strong, waiting for the rules to be met. Dwight, I love this picture. Um, Gene, I blew out 6 or 7 Apex accounts trying to learn to trade the NASDAQ because there were some subtleties that removed me from my money. I'm going to talk about those subtleties here in just a second. Hey, Dwight, awesome pre-trade picture. Ladies and gentlemen, this is a pre-trade picture. Can we take it one level further? I love this picture, Dwight. This makes me happy. Dwight says that I have odds favorable momentum. I'm trading with the trend. Everything says up. And Dwight, did you think 20 days ago that you would be anticipating the entry without a reversal bar, that you would know so much where the market is likely to continue, that you would be calling that shot before it ever even gave an indication that it was happening? Because that's what you did. But the one thing you got to remember is that these are coming up. So that arrow should be looking just a tad bit higher, right? To the areas inside. You're killing it. And then the only other thing, and you don't even have to put this on the chart, but as long as you know it mentally, if that red line is reached before this entry is reached, then rule number 2 is not met, right? Then it's a termination condition. Dwight, you're crushing it. You went from what the hell am I doing to I don't even need a reversal bar to know where I'm entering this trade. And you did it fast, man. Nice job. Great chart read. And great patience. I love celebrating, guys, and that's one to celebrate. Always celebrate your victories, guys. Always celebrate your forward momentum. Snorri, 50-50. No divergence, strong triggers, nice entry. And you're able to capitalize, right? Nice job, Snorri. In at 81. Where was your stop? Was it all the way down here? In the 60s? This is one of those trades. I love the 50-50 look here. I really do. It's a good look. The triggers are strong. That's good. It couldn't have been 10 ticks because the market traded all the way down to 69. It looks like. Or 70. It's hard to tell. Maybe 70. So it went 11 ticks against you. Not a good bottom. And it's a 50-50. And here's one of the challenges on this one. I like it. It fits the rules. And let's go with that. Snorri, it fits the rules, right? If I'm 50-50 on an area, I might look left a little bit. This market's been in a fight. It's gone from the low, divergence low to resistance to support to resistance. And when they tried to break it, I hope everybody took this one and it didn't work out because that's a beautiful look. And then they came right back up to test that area again. Um, Small triggers moved inside. No, I love the entry here. You didn't take this trade down here, Dwight. I would take this trade all day long. I don't even know what unless there were three divergences, 12 ticks, that's perfect, Snorri. It saved your bacon. And then you got out at the trouble spot. Good job. On this one, Dwight, I'm not sure which one you're talking about. On this one? Oh, well, you didn't say your chart. We were looking at a different chart, silly. Once price and triggers broke above on the 13.2, that's okay. You're talking about the future. I can't see what happened. Broke above what? Did the smalls break above resistance? Giving you a 50-50 and then two divergence on the 50-50, you said hell no? Nice job. But see how I can't see that? But I'm a pretty good guesser. Snorri, you followed your rules 100% and you took quick profits at the trouble spot and didn't sit and hope. I think it's great execution. All right, guys, I'm going to take 3 minutes. When I come back, we're going to talk about NASDAQ a little bit. And I notice that I have private messages. Guys, I don't see private messages during the classroom. So I'm going to take 5 minutes. When I come back, guys, we're going to talk about NASDAQ. So if you're a NASDAQ trader, if you're somebody that's trying to work that into your plan, we're going to talk about entries. So I will be back in 5. If you have charts, post them. If you have questions, post them. Ron, I just saw your message. Yeah, I saw that. I laughed so hard when I saw it. Some comedy in the traders chat room, guys. When I come back, we are going to get into the second half. There's my ES right now. You're welcome, Gene. You guys watch the ES. I'll be back in 5. All right, y'all, let's finish strong here. So I'm going to talk about NASDAQ trading. Before I ever talk about NASDAQ trading, I'm going to say a couple things. The first thing is that if you're not comfortable taking trades on the S&P, if you can't read your indicators and make a decision on a trade inside of 4 or 5 seconds, NASDAQ is going to destroy you. Nothing personal. NASDAQ is going to destroy you. It's going to absolutely kill you. And there's things to take into account on NASDAQ. And the first thing, Debbie, have an awesome afternoon. The first thing to take into account on the NASDAQ is that the rules on the large chart don't change, guys. The large chart defines direction. The large chart defines momentum. The large chart defines your areas. If your large chart is not giving you what you need, looking for an entry on the small chart, just like with crude, just like the S&P, isn't going to do anything for you guys. Large chart has to lead the way. So make sure that just because it's a different market, you don't abandon all those things that were bringing you success on crude and on the S&P. Now I'm going to go to my spreadsheet, guys, and we're going to talk about NASDAQ a little bit. Um, and I'm going to show, let me come back here. And I'm going to use this as an example. We'll see if it works. That was at 10:35. NASDAQ moves a lot. That's the first thing you have to know is NASDAQ is all over the place. And this is the perfect lesson. So NASDAQ users, gosh, this is the perfect lesson. Odds favorable momentum is an absolute must. No termination conditions is an absolute must. This is a 50-50 trade, right? But it's a 50-50 trade with no divergent, strong triggers, and little window of opportunity. Is everybody with me so far? That's your entry. That's your window, isn't it? You guys feel pretty good about that? Who's trading NASDAQ? Snorri, Gene? That's your high probability trend trade or your medium probability trade entry. That's your 50-50 entry. Anytime on crude oil, anytime on the S&P. That's where you're entering without hesitation. That's okay. I'm going to give you something, Gene, that's going to eliminate a lot of losers. That's all we're doing right now. This is your entry per the rules 100% the area inside of favorable large triggers. I just want to make sure that we're comfortable on the rules. Here's the difference between NASDAQ and the S&P. Here's the difference between NASDAQ and crude oil. And I'm going to see if we can blow this one up a little bit. We'll get just to this chart and we'll try to eliminate some of the things. On the NASDAQ, when the small triggers are cranking against you, they're going to act as resistance. And you see this a lot. You really do. So guys, your entry was hit right here. And these small triggers were less than a full bar away. Snorri and Gene, you're both good with the gap theory, right? Large chart, large triggers are a full bar away. Life or price is likely to close the gap. So the same is true on the NASDAQ for your entries, but you're using the small triggers. Remember that this is a 13-2 chart. It's not a 5-1 chart. If my small triggers are less than a full bar away, I won't enter the trade at the area. I'll sit on my hands and wait because these small triggers are likely to push it lower, and I don't know how much lower it's likely to push it. So when the small triggers are less than a full bar away, I'm looking for the close on the correct side of them. Does that make sense, Snorri and Gene? I feel like this is y'all's private session here. I'm looking for the close on the correct side of the small. And what you're going to notice, Here's my entry, potentially. And then there's the close on the right side. It's a couple ticks difference. But what it does is it keeps you out of this fight. See how they acted as resistance perfectly? And it just keeps pushing. And you see this a lot on the NASDAQ. So let's go back to 1030. Let me circle it. I want to see where we were here. That may not be a good example. Oh, maybe it is. All right, and so here's the other side of it. Haha, NASDAQ, given lessons. Once again, I have odds favorable and I have a clear path. And you guys remember that the large chart leads the way, right? I haven't reached the fib. I haven't reached the fib. Everything looks good. And here's my window of opportunity. So here's the other side of the NASDAQ. If price pulls back to my area and the small triggers are a full bar away, you guys see that gap theory? I'll enter at the area because it's likely to snap back. And I don't know if it's going to snap back and bounce up, but what it does is it gives me a manageable trade. I'm in at the area, I've had a reversal bar, and I have virtually no risk at that point. Guys, this is the biggest thing on the NASDAQ that I've done. And I'm telling you, I blew out 6 accounts getting there. So let me do this over. I'll put my spreadsheet on another one. Small triggers are absolutely flying. I'm not getting in at the area. Small triggers were cranking up against it, super strong. Notice how they acted as support. And then I get in on the correct side of the small triggers, and the large chart wins. That little bit of patience, guys, pays huge dividends on the NASDAQ. The poor entries you showed me, one of them didn't have any momentum, fought the trend, right? Didn't let the large chart lead the way. The second trade, the same thing. And then the final trade, you traded with everything. And you got in early, Gene. So check it out. Let me show you. Let me see if I can find it. There it is. Great example. See how you got in at the right spot, but the small triggers were super, super strong? And there's your first close on the correct side. It's almost the same price. You sacrifice a little bit, but it eliminates, in a lot of instances, that little run over. That's okay. I mean, it's just a great lesson. On crude oil, on the S&P, Gene, that's the perfect entry. On NASDAQ, it changes just a little bit. But when these small triggers are a full bar away, man, it really, really helps the situation. So smalls were strong against. And what it does is it keeps you out of that trade a little bit. And then here's a picture of the smalls being a full bar away. I think this was Allen's trade. Getting in right at the area, and there's that huge gap to get back. It creates a real manageable trade. Whoop, and that file is dead. And there it is again, strong triggers up against. And it just keeps railing to the top side. And then there's one, smalls are the full bar away. And I think this was Allen's trade. Allen, I love this trade. And this is where your trade actually helped me a little bit on just solidifying that that's a get in at the area moment when those small triggers are so far away. So Gene and Snorri, as you go through and you talk about it, you'll begin to notice that pattern a lot. So D-Rock, you had momentum. You didn't have a termination condition. You had strong triggers. You had a small window of opportunity. And it just didn't go, did it? D-Rock, I love it. I love everything about it. It fit the rules 100%. It's just a cost of doing business. And you were in at 92, and you were out at 83. That's okay. It's perfect. It just didn't work. Just one of the losers. These get easier to take. The more repetitions you get, these get easier to take. They really do. Smalls full bar away once again, guys. That was a pretty easy trade. Everything says down, the path is clear. And this is one that someone posted in the room. Do you see how getting in at the area, you were already paid on $100 before that retracement even happened. That's a great heads up entry. But you had time to manage. You had time to get in, and then beautiful trade all the way down to the bottom. Gene and Snorri, does that help a little bit? And I can keep going through it. This one was labeled, yep, the smalls again. So what does it look like? Look at those super strong triggers. Let it wait, right? And then super strong triggers. It gets run over. This one was labeled smalls win again. Look at that. Zing! It happens. So guys, this is my entry thoughts. And I summed it up. And this is the one that I'll share in the room. Large chart rules don't change. Snorri, remember, and guys, remember everybody, what people show you and what their reality is are not always the same. Has anyone in this room ever just shown me winners and don't show me their 700 losers? And you know what happens a lot, guys, is when people show you nothing but winners, look at their P&L. My favorite is when you guys show me $1,000 winner because you're so proud of it, but you're down $500 on your P&L, and you forget that I can see that, and I wonder where's the $2,500 in losers before that big winner, because that's what we need to fix, right? So guys, don't get starstruck. Take their pictures and do your own analysis. Don't worry about the wins and losses. Don't worry about the P&L. Look at it. Were there advantages? Does it fit your plan? And if it's something that you see that begins to resonate with you, then develop a plan for it. And I'll help you guys with plans. I'm more than happy. But you have to tell me the rules for your plan. So on the NASDAQ, large chart rules don't change, ever. The two things that I watch on NASDAQ entries, the first thing on my small chart, where are my small triggers? For a long trade, if they are above the reversal bar marker when price reaches my area, remember, when price reaches my area, I'll go with the area. If they're below the reversal bar marker when price reaches the area, I'll wait for a close on the correct side. And guys, on the S&P, I'm in at that area all day long, no matter what. On NASDAQ, I have to incorporate just a little bit of patience. Obviously, the rules aren't met, but rather than attempting here, even if you attempted on the correct side, it gave you a couple ticks, right? So we'll see if we can find some real life NASDAQ examples. There's a termination to the tick. Remember when I said that fibs create reactions? Fibs are decision points, guys. This is a beautiful example of it. On these 4 bars, 5 bars, look at all of the indecision. Look at all the fluctuations on a smaller, faster chart when the rules aren't met on the large chart. You're going to see this a lot. When your rules aren't met, you're going to have trouble finding an entry. Anyone else have that experience? It's a bad top. I don't know why I have that crazy midband on there. That was when I reloaded my templates. Did a complete refresh. Let me get that off of there. That means nothing to me. It's a bad top. It's a termination, not from a fib. Price pushes all the way down to support in the midband, and look where your large triggers are. They're above the reversal bar marker. What do you guys think about that? Does anyone have any ideas what may happen here? You have one-to-ones up top. Are we looking at the same market, Snorri? This is crude oil. The S&P had one-to-ones right there. Just want to make sure because I remember that. Okay, so your crude oil has it? Then we may have a little difference of opinion here. Remember that mine is NinjaTrader 7, and mine has also had a complete enema coming into the week where I rebuilt every workspace. So you guys are good. Then definitely it saved you, right? So D-Rock, if you had, isn't that the trade that you took? Nope, that's not it. That's crude oil. You have magenta one-to-ones there, guys. You have small swing one-to-ones. D-Rock, I don't even have those. I don't, guys, I don't have small swing one-to-ones on my chart at all. But I will remind you that when I'm looking for areas that may reverse the market, small swing one-to-ones don't make the list. Guys, small swing one-to-ones are a microscopic look of Fibonacci retracements. Um, they are smaller. If they line up with other areas, I might give them a little credit. But the reality is these small swing one-to-ones, the large ones we find are used by the institutions. 100% Fibonacci alternates, that's a pretty big deal. These small ones come from so many tiny swings. They're going to show up all the time. If they line up with areas, it's awesome. They may create a bounce. But I don't have any rules at all that use small swing one-to-ones. Only those. So maybe somebody was using them that pushed down, right? And when we hit here, the gap theory is in effect. Yeah, only yellows, Snorri. So right now, the gap theory is in full effect. Let me open up my editor because we took that picture, right? Price accelerates away from the large chart, hits support, hits a midband. The only thing that this means for you guys is that it's likely to close the gap to the large triggers that are above, which means I'm not looking for a short in here because it's likely to get run over by that vacuum. I'm sure you can. Of course, I'm not going to have them on here. But under, I believe, the Pro Trader, when you look at divergence, oh, there it is, divergence potential. There's my large ones, and then 8 may have the small ones on here. Just make them false if you don't want to use them. Oh, look at that, guys. We closed the gap. Isn't that rad? That's right, I just said rad. I'm a child of the 80s. Isn't that amazing? That because of a simple pattern in the market that repeats itself all the time, you didn't take this short trade. Especially against 3 divergences. I don't know about you guys, but I'm pretty amazed. I'm pretty amazed that the fibs hold the way they hold. I'm pretty amazed that 3 simple rules keep me out of the majority of the losers that most people take. I'm amazed that those same 3 simple rules get me into winning trades more often than they're losing trades. And I'm pretty amazed at simplicity, guys. The easier it is for you. You could make a plan to trade the gap, Snorri. Since nobody has pictures right now, let me show you how you would do that. And it means that I have to build a chart. What market is this? Crude oil? It means that I have to build a 21-3 chart. I have to build an even higher time frame. And you guys are going to love this because this is just more chart reading, is all it is. Prepare to have your mind blown. All right, so Snorri, I'm going to slide my 13.2 over to where the 5.1 is. And then what I'm building right now is a 21-3 chart. So the 21-3 is to the 13-2 as the 13-2 is to the 5-1. Does that make sense, everybody? All we've done is we have stepped up a time frame. Is everybody okay with that? And I may have just hemorrhaged my computer. There it is. All right, so Snorri. Odds favorable momentum. It's not a clear path, though. If I circle the tail, there it is. It's the pullback to support with the large triggers up. But the challenge, Snorri, is where is the gap theory going to take place, right? Is it going to be this fib, or this fib? Somewhere in this range. With all this momentum coming from a good bottom, the 21 says, hey, Mark, we're going up. Does that make sense so far, guys? The small's accelerating above the large says that we have momentum and we're going up and we're coming from a good bottom. So here's my gap theory in place. Isn't this just a trend trade from this time frame? It's the same chart reading. It's the same advantages. The difference is this isn't an area inside of favorable large triggers. So if I'm saying that gap theory is likely to close because of the momentum on the large chart, on my smaller, faster chart, Snorri, there's a couple ways I can approach it. I can say I'll take a close on the correct side of the smalls, and the first one gets run over, right? You're hoping, but it gets slaughtered. And then I can say we've reached a fib, and none of the triggers went through, and there's one divergence. And then there's a second divergence, and then there's a third divergence, maybe a close there to take me back up to the large triggers, and then I make a decision, right? So you'd have to have entry criteria. But everything for that gap theory close would have to be coming from a 21. So let's look at this one right here. We'll do it again. Guys, it's just chart reading. At 9:51 a.m., the gap theory was true. So at 9:51 a.m., what did it look like? Odds favorable, 50-50, pullback, there's your gap theory. Once again, it's just chart reading, right? The challenge is when people take gap theories, right? They're like, oh, look, the gap theory. I'm going to go short, but without being supported by this one, it's really more of a guess. Yep, we'll break it into 3 charts. And I'm going to be real honest with you guys. My brain hates 3 charts because what I start to do is I start talking myself out of rules-based trades, and I start talking myself into rules-breaking trades because of what another chart says. Because your brain is always going to go with the chart that gets you into the trade. And in order to take a gap theory trade story, you have to fight direction, and you have to fight momentum, and you have to hope that this little red line holds. It can be done. I have absolutely no idea what the percentage of wins is, but I can tell you from my own experience that if this chart says down and this chart says up, there's a conflict. And if this chart says down and this chart says up and this chart says 3 divergences, why would I take that short against everything? Because I'm hoping that a 50-50 works here. So the ideal look, if you're really going to do it, and I can't even find one on the large chart that really supports it. The ideal look on a 21 would be a 100% odds favorable clear path, and then it has a better shot. So it can be done, Snorri, and all it is chart reading. It's the exact same concept. I see more people lose these trades than win these trades, and it doesn't mean that it's a bad trade, but it means that it's probably a lower percentage. And what happens, and I know because I did this, is you'll start taking this trade from here and it doesn't go. And then you'll take it from here and it doesn't go. And then you take it from here and it doesn't go. And then at that point, you're just pissed off. So you take like 5 more to prove to the market that you're so damn smart. Not that I've ever done that. Over and over and over again. So I hope that helps a little bit. Guys, keep these questions. I'll talk about every trade known to man. I certainly don't mind talking about any of them. Um, but we'll do it in the same fashion that we do every trade that you guys take. We'll talk about advantages and we'll talk about disadvantages. And this is like 1990s. Good bottom, right? First entry. I'm trying to see 1121, 1121. First, you tried to catch the first move. It closed the gap all the way back to the large triggers. This is why split triggers, I hate split triggers, Gary. Why we look for favorable. But great recovery. Once it did close the gap, you get in on the correct side of everything and it just runs because of the good bottom. Nice recovery, Gary. When these large triggers are all the way down here, there's just no reason to fight it. Like, let it sort itself out. Great job, dude. Nice trade. What do you guys want to talk about? There's crude oil, pivot stop out, down to support. They're trying to figure stuff out, aren't they? They're trying to figure out what the heck they're going to do. Nobody went long into a divergence high with no triggers through, did they? Who got bored and did it? Who said, I hope it breaks? I've done it before. Nobody in the room? You guys are making me proud. I've taken that trade 1,000 times. Well, I hope it breaks because it's a good bottom. Not today, Tony. Solid. No triggers, right into resistance. And guys, they're just grinding at this point. Somebody made the decision that the market has to go up. And it's going up. And if you didn't have a rules-based entry, guess what? It's not your money. If you didn't have a rules-based entry, it's not your money. It might be your money one day, but it's not your money. So how are we doing? Anybody learn something today? Is there anything that I can cover that might make your life a little easier? Is there a concept that you're struggling with? Is there anything that you guys aren't 100% proficient at that you'd like to talk about? Should I close the room and let you get to trading? There's no conditions met right now. I've got everything up in a clear path. Should we see if it pulls back and gets us? Isn't that awesome, though? How quick did that happen? Oh, Safia. I hate to say it. I didn't know you were gone. Did I really, D-Rock? I love that. The best part is you guys are going to have more questions tomorrow. I still have questions every day. My brother and I talk on Skype every morning. And man, we talk about everything. We talk about looks. We talk about patterns. We talk about everything. I just opened up my Skype and he sent me 20 messages since I started teaching class. He knows I teach class. But we're each other's sounding board, guys. We still get feedback from one another. He is freaking brilliant and so much better at this than me. It's close, D-Rock. So what do we have right now on the S&P? Let's talk about the look. We have a strong trending market. We have over 30 bars in the same direction. Everything is flying and the path is clear. There are some traders that say, with the fib looming in the distance, with everything saying up, they'll just keep buying the mid band until it stops working. When the market has proven that it wants to smash through anything in its way and everything's cranking up, some people will take that trade. D-Rock, is this look? Of course not, right? Still a pretty good look, wouldn't you say? So if I have this look that isn't the best of the best momentum, but my path is clear, and I do have an area inside of favorable large triggers, and let's put maybe a stipulation on it. If divergence doesn't print on my small chart, since my momentum isn't overwhelming on my large, I'll take the trade and I'll manage it tight because it's not high probability. Do you see how I just went through the advantages to make a determination on whether or not this is a trade that I'm willing to take? If your plan says that you have to have odds favorable momentum, D-Rock, is that your trade? No. But that doesn't mean that it can't be someday. And guys, that's what I always want you to leave yourself open to. Just because it's not your trade today doesn't mean that it won't be your trade in a month, 2 months, when your chart reading's better, right? This is a stepping stone. You guys are going to grow beyond the very basics. You guys are going to start to recognize patterns that still give you enough advantages to take a trade. And the more that you simulate, the more that you study, the more class feedback that you receive, and the more practice that you give yourself, the sooner you're going to get to that point. I always encourage people, ask yourself, do I need more than the basics? Do I need more than the best of the best to hit my goals every day? The answer is probably an overwhelming no for everybody. But we get bored, right? It's hard to sit on our hands and do nothing. It's hard to wait for the best of the best. John used to always say in class, he's like, if Elon Musk called you right now and said, hey, Snorri, I'll pay you $250,000 a year, but I need you to sit in front of a computer for 6 hours and only click the mouse about 5 or 6 times during the day. Is there anybody in this room that wouldn't take that job? All I have to do is sit in front of a computer and click a mouse 5 or 6 times a day. I would take it. But guys, if the job were this, every one of you would be fired. I would have been fired. So it's convincing yourself that the rules create advantages. It's developing trust that the rules create advantages. It's doing enough study to where you're like, man, I don't want to take a trade that's outside of my plan, right? We're home stretching it. There's nothing to do in any of the markets. And you know what, Snorri, you're absolutely right. The NASDAQ is faster and it creates a lot of opportunities. Do you want to, can I give you the other side of the sword on that one? Because it's definitely a catch-22. And I'm going to, here, watch this. I'm going to type it out so that you can kind of go through it. I'm going to go through what the thought process is or what it was for me. And guys, remember, just because it's me doesn't mean that it's you. We'll make it big. Ready? NQ moves more. More opportunities. More trades. I need to look for more trades because NQ has them by default. My rules are not met but I feel like I should be busy. I'm busy finding losers. This was my path on the NASDAQ, guys. When John Novak said, hey, Mark, look at all the opportunities in the NASDAQ. This is exactly what happened to me. I said, ooh, the NASDAQ moves more. Yes, I don't have to wait so long. The NASDAQ has more opportunities. I can't wait to find them all. I'm going to take more trades. And guys, do you want to know how many trades I took in the NASDAQ when I first started trading it? I took 30 to 40 trades, Snorri, because my brain had already told me that the NASDAQ is so active that I need to be busy. And I stopped looking for my rules to be met. I started looking for the trades. I started letting the small chart lead the way. I started fighting termination conditions. Yeah, I broke my rules because once I told my brain that it moves more and I need more, I started looking for more. And this is what a lot of people do. This is what he didn't, Gene, because it's crazy busy. And that's another one of those HBNS things, Gene. The reason John Novak started trading the NASDAQ in front of people is because he couldn't sit on his hands and do nothing and wait for the perfect trades. So he looked for opportunities to trade more. So what happened with me, Snorri, and it may not happen with you because you haven't made all the mistakes that I've made in life, is because I felt like I should be busy, I was looking for trades. I wasn't looking for rules to be met. And I was finding losers more than I was finding winners. And it took me getting slaughtered over and over again for me to really step back and say, okay, maybe it doesn't give a ton of opportunities. Maybe I still have to wait for my rules to be met. And then I had to change my approach to be able to take the correct trade. So I love NASDAQ, guys. I really do. And I trade NASDAQ every day. I watch the NASDAQ and I watch crude oil because the NASDAQ and the S&P are too similar. Why do I love it? Because I finally know how to follow my rules. How's that for an answer? Because I can finally sit on my hands and do nothing when there's nothing to do. And I don't know that it gives more opportunities, to be honest with you, Snorri. Yesterday, I took as many crude oil trades as I did on the NASDAQ. But before I really stuck to my rules, I was taking way more trades. Here you go, Tony. This is my NASDAQ trading in a nutshell. So, Snorri, I like it. That's it. Guys, that's it for my rules. Y'all think it's something magical. It's not. This is it. Large chart rules don't change. Large chart leads the way 100%. The only difference, reversal bar marker, the only difference is I look at the relationship to my small triggers in the reversal bar marker. That is the only difference between crude oil trades that I take and NASDAQ trades that I take. It's the only difference. If, bum, 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 this is all on the spreadsheet. If the small bars are a full bar away when I take at the point of entry, I enter at the area. That's it. And if the smalls are closer than a full bar away, I sit on my hands and do nothing. And I can't tell you how many accounts I blew out to learn those lessons. And you guys get them for free. So, Tony, all those pictures are in the spreadsheet. But I'm telling you guys, that's the only difference that I have found on the NASDAQ. Large chart leads the way. Odds favorable momentum leads the way. No termination conditions lead the way. And then I just modify my entry a little bit. Reversal bar marker, Gene. So if I were looking for an entry at the mid band right here. And I'm not saying that it's a rules-based trade. All I'm doing is I'm looking at where the reversal bar is, where the potential for the reversal bar is, where my small triggers are. Let's see if it sets up. My small triggers are below the reversal bar marker. Therefore, my rules say the only way that I'm entering a long trend trade is if I get a close on the correct side of the small. Does that make sense? That's it in a nutshell, guys. My trigger lines are below the reversal bar marker. I'm not entering at the area. I won't do it. They're still below the reversal bar marker. I won't take this trade, which means that I have to be okay missing it. That was it live. I don't know what's going to happen here. It may keep going up just because the market is absolutely grinding. I'm willing to miss that trade because my rules weren't met. That's it. And I don't care what happens next, guys. But I can't tell you how many times I chose not to take the trade and it does this. No, because my small triggers are below the reversal bar marker. That's it. That's my rule. I don't hope, I don't wish, I don't want. I mean, my rules aren't met here, guys, but let's just see what happens. Let's watch it live. Oh my gosh, look, it's still going down. Ask it. You don't have to post question before you ask a question. You can just ask it. Guys, the thing that you have to ask yourself, the thing that you have to ask yourself is, can you be okay not taking a trade? That's the hardest thing. Are you okay if it goes without you? I didn't have rules met for a high probability trend trade, so I wouldn't have taken this one anyway. So PFI, you're not listening though, right? You changed the rule. You changed the rule. Take care, Safia. Is you said you were doing the same waiting for the reversal bar. I never said I was waiting for a reversal bar. What I did say was I was waiting for a close on the correct side of the triggers. Snorri, I wouldn't because this doesn't fit my rules. If the rules were true, absolutely. If the rules for a high probability trend trade or a 50-50 trade were true, absolutely. I would enter at the area because the small triggers are a full bar away. And it doesn't guarantee a winner, guys. What it does is it keeps you from entering all the way down here with unmanageable risk. Absolutely, Snorri. And guys, I'm going to tell you right now, I wouldn't enter this trade. I would be okay with missing it. All right, you ready? D-Rock? What does a close mean? A close means that the bar formed. So large chart leads the way. Strong triggers, clear path. Are you good with this? That never changes. When price reached the mid band right there inside of favorable large triggers, my small triggers were close. Too close, not a full bar away. So what I did is I waited for a bar to form and close on the correct side, and I literally have an order waiting for it right there. And what it does is it keeps me from trying this one and getting stopped out, trying this one and resistance, those small triggers acting as resistance, trying this one and those small triggers acting like resistance, and then finally taking the close on the correct side. Guys, you're gonna miss a lot of trades. Only 2 charts, that's all I need. You're gonna miss a lot of trades. That's okay. You don't need all of them. And this one for me, guys, so check it out. This was a 50-50 with one divergence, but because when price reached the areas, the small triggers were too close, I literally took this picture and said I'm willing to miss this one. And then here we go. Next picture. When it did close below, I'm not willing to put 10 points, $200 worth of risk on a 50-50. Does that make sense? So what did I have to do? I had to say to myself, okay, I won't take this trade because I don't like the risk. And here's the cool thing on the 50-50. Is it turned into a 50-50 with two divergences. And that's the slowest picture ever. And then from there, my rules simply aren't met. PFI, you're still not listening to me. It's not reversal bars. It's a close on the correct side of the triggers. Close on the correct side of the triggers. Write it down. And then Snorri, I use the same management that's provided by Nexgen. I use a 24 tick stop because it gives me time to react. And guys, 24 ticks on NASDAQ is only $120. It's no different than 12 ticks on crude in terms of money. But it gives me time to react. So when the market closes below these small triggers, guys, I don't want this trade. I'm just not willing to risk that much because my stop has to be all the way up here at 13 and my entry was at 04. That's nine points. That's $180 per contract. Small triggers, PFI. Not that I would trade into three divergences. I would have to take the close on the side of the correct side of the small. Look how far away the close is from the area where the trade should happen. You have to decide whether or not that's for you. Close means that a full reversal bar formed, closed, the bottom of the bar was below the small triggers. Isn't this a gap from the area? This one, Snorri? Hold on. When I reached the areas, my small triggers were not below the reversal bar marker. So no, I didn't have a full bar's room to get back. See how that bar closed inside of it? See how it closed inside, not below? PFI, this is why I don't wait for a reversal bar marker, because these triggers have the potential to act as support. And then D-Rock, if my rules are true and I'm waiting for a trade, cool. Let's say that I'm waiting for a close on the correct side of the small to go short. I will activate a stop order, which means that if the market creates a reversal bar and that reversal bar marker is on the correct side of the triggers, I will literally wait for the market like this to enter the market. Rather, because I can't put a limit order, because if I put a limit order above the market, well, it's supposed to just put you right into the position because it'll give you the best price. So what I would do, D-Rock, and you guys that are trying to take it, is when the market comes down to here, right? And I see that my small triggers are coming down, I will literally put a stop order right on the reversal bar marker where that becomes a close on the correct side. That becomes my entry. There is a cost associated with it, which is why the closer that reversal bar is to the areas, the more I like the trade. And sometimes it just means that I'm not willing to take it because it's such a huge distance. Does that make sense, guys? And then it's just rinse and repeat. Go back and test that. So open up your NASDAQ. Gosh, they're just grinding, aren't they? And let's look for a high probability. Let's see what happened at 10:06. Just for grins. Yeah, I'll look for examples, Gene. And I'm glad to do this, guys. This is a great use of time in class, right? A great use of time because all you're doing is you're learning how to read charts better. So we were looking for 10:06. It was a 50-50 that failed at 10:06. Man, there's a lot of movement in the NASDAQ, isn't there? All right. Assuming everything is correct according to the 13.2 and the market comes to an area, on the small one, if the gap area is in place, you enter at the area, yes. If the no gap, you wait for the close on the correct side. Perfect. Providing too much risk is not sound. So that's perfect. So guys, here it is right here. You ready? 50-50 from a good top, right? Most of you guys would look for this trade with this look. 50-50 from a good top, larger, not a full bar away. Um, can you guys hear me? Give me a Y if you can hear me. Is it just Snorri? Okay. I'm not sure, Dwight. I remember giving you feedback on a chart and you responded to me. If you posted another that you didn't get feedback on, post it and we'll see where we're at. Can we agree that everybody from a good top, 50-50, strong triggers, large aren't a full bar away? Snorri, you're looking for the trade here, right? Here's the bottom of my window and here's the top of my window. That's a pretty big range, but that's okay. So we're cranking up and it's going to look different after the fact. Market's coming up, coming up, coming up, coming up, and I reach the area. And when I reach the area, if my reversal bar marker is here, below, I don't have any rules for momentum, so I don't know what to tell you, PFI. You have to show me pictures. If the reversal bar markers are above, or the small triggers are above the reversal bar marker, no trade. I'm being patient. If they are below the reversal bar marker, I get in at the area. Guys, those are my rules. That's it. PFI, all we're talking about is high probability trend trades. We're not talking anything about momentum trades. Couldn't care less about momentum trades. I don't teach them. I'll talk about yours. PFI, 50-50 trade, right? I've got a termination, creates a full reversal, gives me odds favorable momentum. If momentum and trend are down, you shouldn't have to ask me if I'm selling, right? All we're talking about right now, guys, is entries. No, has nothing to do with support. When price reaches my area, if my small triggers are above my reversal bar marker, I don't take the trade because I don't have room. If my small triggers are below the reversal bar marker, when I reach the area, I'll take the trade. because it gives me a chance to manage. And guys, it has to be the large chart. So look what this one does. Do you see how the small triggers behave as support? Everybody give me a Y if you see this, if you're trying to be a Nasdaqian. This right here is why I incorporate that rule into my trading. This is why if the small triggers are closer than a bar, I don't take it because very often they behave as support or resistance going the other direction. So let's see if I'm waiting for a close on the correct side. I don't remember what this one did. I never got it at any of the areas. Does that make sense, you guys that are trying to figure out NASDAQ? Look at this. It used it as support. It used it as support. It used it as support. And up here, it's not my trade anymore. I'm done. That's it. So let's talk about the other side. When I first started trading NASDAQ, I went short here and I lost. And then I went short here and got stopped out. And then I probably tried one more here, just mad as hell. And I blew out a lot of accounts, guys. I took a lot of losers like that. Coming from the good top, everything says down. It has a termination condition. But even this right here, if you're like, oh my gosh, I don't, D-Rock. It moves too fast for a 5-1. If you thought you were going to take that neato momentum style trade, a close on the correct side helps as well. So it's a 34.5 and a 13.2 D-Rock, but they are set up to look like a 13.2 and a 5-1. Pretty cool, right? Guys, NASDAQ will destroy you if you don't know your rules. It's the exact same concept, exact same rules. The only thing that's different is whether or not you're taking an entry that makes sense, and the entry changes on it. Clear path, anything can happen. Bars inside. What do you want my feedback on, Dwight? What are you curious about? Is it a high probability trend trade? I'm going to make you answer the questions because I know that you know the answers. Awesome, Snorri. Can it be a high probability trend trade without odds favorable momentum, Dwight? Nope. Why? Because we give away the advantage of momentum, right? So this one's gone from the equation. So Dwight, you have a clear path and you have an area inside of favorable large triggers. Could you say that this represents a medium probability scenario? And if you take it, you'll manage it aggressively. Absolutely. Great chart read, man. And I did miss that one, so that was very convenient. And guys, it's afternoon. That's it. We made it. For those of you that are looking on the NASDAQ, again, I enjoy trading the NASDAQ very much. But I also feel, and feelings will get you in trouble, I also feel that if you're not comfortable with your rules, if you don't have a solid plan, there's a lot more opportunity for mistakes. And then I'm going to say the same thing that I say every day. If you're not hitting your goals, I think so, D-Rock. If you're not hitting your goals on two simple trades, and you know who you are if you need to hear this. If you're not hitting your goals on two simple trades, stop looking for more if you feel that's in your best interest. I don't give trading advice. If you can't be successful with this, stop trying to be successful with everything else. It means that your brain can't process 75 different rules on 4 different markets. And maybe you need to embrace the idea that you don't always have to be in the market, that every move isn't your move. That's the end of my soapbox for that one, guys. If you can't do it simple, how are you going to do it complex? Right? There's people that do it, Snorri. There's people that try to find trades in the Nasdaq, the S&P, and crude oil at the same time. So they take three markets, and then in each of those markets, they're looking for four different types of trades. So at any given moment, they're looking for 12 trades, and each trade has a minimum of 5 rules. So every time they open a chart, their brain is processing through 60 different items. And you guys want to know the truth? The people that look for everything typically find nothing. That's how this KISS plan came to be. I had a gentleman call me, brilliant man. Mark, I can't find trades. There aren't any trades. There aren't opportunities in the market. This is absolute bullshit. Pardon my French. I should have muted the recording.